Hi, welcome to another Learn, Grow, Invest video. I'm Jermaine. I have here with me Chike, and today we're gonna have episode 2 for 2022, our stocks to watch. And this is, I think, quickly become one of our most popular videos, which I think with good reason. So before I explain the format, let's just quickly roll the intro. All right, so before we get started, typically how the stocks to watch videos go, we'll identify our thought process for putting stocks on our watch list. And I say watch list because, of course, and I'm going to load that disclaimer shortly, I'll get to it. But it's a watch list because for us, we're not going to go into a specific timeline, right? We're just going to say these are the stocks that's on our watch list. These are the reasons why we think it's worth watching. For this, since it's episode 2, we're going to be talking about the ones that we shared in episode 1 and see how they are doing. And we'll discuss, whether or not we think those picks are still worth it to hold on to after 3 months. And so that's the format we're going to take today. I'm going to open with a brief word of prayer. So let's get into that. Lord, we thank you so much for this community. I thank you, Lord, that we're able to learn, grow, and invest together. We pray that you'll bless us with wisdom, knowledge, and understanding. Be with us now in Jesus' name. Amen. All right. So unfortunately, guys, we have not heard from David as yet. My suspicion is that he'll be able to join us a little later. But for now, it'll just be myself and Chike and David. Probably, hopefully, within the next hour, he'll join us. Wow, Tiffany is joining us from inside Japan. Wow, I think that's interesting. Welcome. Is it your first time here, Tiffany? That's pretty cool. That's pretty cool. All right, so I hope that even though if you're joining from Japan, you know that we're going to be talking about companies on the Jamaica Stock Exchange. Hopefully that's okay. So Chike, you want to go first, talk about your thought process for adding stocks to your watch list?
Well, everyone who doesn't know or would know that I'm the long-term investor.
Mm-hmm.
I have a minimum of holding stuff for at least 3 years to as long as forever, pretty much, because I subscribe to the thought process that if a company is doing what I need it to do in terms of, I have always been more, when I started investing, I've always been more of an income person, because I have a wide portfolio of things that I'm invested in. So for me, when it comes to stocks, it's always been a medium to long term focus. I'm slowly reading that back in now to as much as 12 months. But I mean, and of course, if a stock really pops off, or should I say a company that I hold really goes off the rails, which is clearly possible in the Jamaican market based on how small the market is and so forth, and different conditions and indicators. There's nothing wrong with taking profit and then being able to come back in later on if I continue to if you really like the company at X price and it goes down, then you should like it even more, right? Normally. So
yeah, agreed. All right, so we have Tony saying she's heard you for the millionth time, Chike, that you're a long-term investor.
And you'll hear it for the billionth time and trillionth time because it's not changing.
All right. So guys, we have David here backstage. Let's bring him on. Hey David, how you doing, man?
I'm good. Just got the chance to finally stop, so I actually can come on stream. Boy, that disclosure a while ago was kind of shocking, You talked about it earlier?
What's that? No, I missed it.
The JetCon one.
No, we haven't gotten to anything as yet.
Yeah, we haven't spoken about anything as yet. So let's let's talk about that in a few. What we're talking about now, David, is we're talking about what goes into our stock, adding stocks to our watch list. So what's our process for going through and determining which stocks we want to add to our watch list. So what's that process like for you?
Well, to be honest, the first thing it comes down to is the company. Does the company make sense? No, because if the company does not make any sense, then you have to understand either how did they make the money or how they actually generate profit. Because although person is going to be saying that no matter, when people like the stock price, that is like the stock price, and that is kind of true in Jamaica. But at the same time, you have to be able to sleep at night time. Like I see all the time that I don't like this mindset of just buying a company and not setting a target and then going to, way business and be like, oh, everything good. No. If you get a company and it's on your watch list and you're not monitoring it or have some kind of alerts in place and you miss those quote unquote potential gains, it's gonna hit you. And the thing about psychology is that once you've had one miss and you probably have a second one, it mentally starts to accumulate on you. So yeah, that's just kind of the thing I'm thinking about it. And it all comes down to what you want because, for example, right now you have a lot of companies which are quote unquote oversold. And I'm not talking technical analysis or anything like that. I'm just talking from a simple, rational perspective because the companies which have been significantly impacted during COVID from a profit and loss standpoint alongside, persons wanting cash. And then you have persons who have, seen that companies sound base is still fine. So there's accumulators. So for example, you mentioned this German about Trans-Jamaican Highway. So persons pulled out when they listed or Jamaica locked down, you had COVID cases or whatever. And that was understandable. But at the same time, TJ demonstrated in the year that, those dividend yields they're talking about are real. Because we're like, can TJ actually pay this money? But thanks to the bond restructure and everything, it made sense. And the thing is, I'm monitoring TJ and everything because I've used TJ for many different reasons. We talked about it up here before, Jeremy, but yeah. But when it comes to adding to your watch list or stocks to watch, you really need to be like, what price target do you see? What potential profit do you actually foresee as well? And you know, is a company's quote unquote surprise is going to really surprise the market because Jimmy can surprise the market every day and we still like where's Jimmy's gains? You understand? And even when we're talking about their stocks to watch when back in January, Jeremy, remember we were talking about Fesco? And I said it could $6 and we're just laughing right now at the fact that Fesco took $6 on March 1 and went to it's $8 in that same week.
Yeah.
And it's those kind of things that you have to understand that the president might not look as peachy, but at the same time, if you understand what's going on with the company, what's going on in the economy, and what's going on in the environment, it works in your favor.
Yeah, yeah, I agree. So, I mean, for me, and you guys know this as well about me. I go through a process, right? So, I'm looking at the company first. I want to understand the business model. I want to know how it makes money. I'm trying to understand things like what type of things like risk, and things that can impact the company's ability to consistently be profitable and maintain a certain level of profitability, right? Because David used the word rightly so. If the market is not surprised by revenues or profits, you're not likely to see anything significant because there are companies that have consistently performed and there's no movement. And that's because we expect them to consistently perform. So I'm looking at the business first and then I I invest for two reasons. So whereas Chike would invest long term only, I invest both short term and I would say mid to long term, right? Because my timeline is really 3 to 5 years. Once I find a company that I really like, I'm looking to hold that company for at least 3 to 5 years. And the group would notice I'm not looking for anything short of a triple digit gain for everything that I'm looking at. So once it's on my watch list, I'm expecting that I can get at least a triple digit gain before I either take profits and then re-enter later on, or I just maybe close my position entirely if I think that it has met that goal for me. So it's not always about timeline, because it could be that I do something in the short term, but I like the company long term. And so maybe because I understand that at some points throughout the year, then there's going to be a sell down, because maybe it's just not getting the same amount of attention. And this is something I've showed to Chike before, how it works, where you'll just see some prices just start to trend down just a little, just a little. So if you take profits at a certain point, then you have the ability to take those profits and buy more shares later on at a lower price, right? You have to know what you're doing, of course, and it's something that I don't do every single day or every single week. And that's because, again, I'd say to you guys, you have to be selective about your trades. And then you really want to focus most of your strategy on just buying consistently. If you're a beginner, I recommend that you speak to your financial advisor first, of course, but you want to keep the number of stocks in your portfolio small, because it just helps you. And on that note, actually remember for us to use our disclaimer before we share anything relating to picks, right? So anything that we're going to discuss here, because we're about to get into the picks, the watch list, any information shared here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice by myself, Chike, or David. And we are definitely not seeking to solicit or encourage you to buy or sell anything that we're going to speak about here. All right, let's have to get that out of the way. All right, so hopefully that was helpful, because I think that it would help persons to kind of just have a process in mind, right? Because we recommend that, for even everything that we mentioned, we're going to talk about, the things that we're looking at. We may look at the price action, or the recent statements, if it makes sense. But the thing that we wanted to take away from this is just the discussion between three people about companies that they're looking at. And close to the end, we'll take some questions. But if you have questions as you go about the companies that we're speaking about, feel free to raise them, and we'll get to them. All right. So let me bring up the previous one. So the very first one that we spoke about last time, guys. So your David and Chike picked the very first one was Separate. All right. How do you guys feel about Separate? No, that's still on your watch list.
Why, to be honest, at the end of the day, they're benefiting from the European economy, which is a good thing. So on the flip side, Russia happened. Like,
all right. So
it's a very delicate balance in the sense that, yes, they're in the promotions with their cheese Zulu snack. They've seen the articles in the Observer and elsewhere about their new products as well. So it's just really to sit back and actually see what it manifests, because it's the company I'm observing, but to be honest, it's kind of more on the lower end of the spectrum of potential gains, just because of what's going on.
Okay, so you're saying it's still on the watch list, but it's moving down in terms of priority. Is that what you're saying, David?
Yes, a while ago, I was saying yes. It's on low end of the priority scale right now.
Yeah. Well, at the point that we did the last stocks to watch, it was $65, and now it's $59. So I mean, just a slight decrease, really. Chike, what about you?
Don't care.
Don't care in terms of what's happening in Russia.
Separate is a solid company for Jamaica, in my opinion. Backbone, breadbasket manufacturing, right? Nothing's changed. Yes, with a long-term viewpoint, economies go through cycles. The situation for that has happened with Ukraine and the entire supply chain issue is not something that has affected everybody, but will it continue to affect very good companies in terms of those that are, one, capitalized properly, two, have proper structure. Companies, people must remember that companies that are on the main market, they are deemed to have better structure in terms of how they are run, etc., so forth. And separate as it stands, it's going to do what it's supposed to do. So yes, cool, we have a dip. They have something. They had a fire and they bounced back. Everybody, there were people that ran for the exit immediately thinking, oh, the sky is falling because they had a fire. And those who were smart, those who were savvy, got to pick up separate shares, pick up those same shares when those persons were being fearful, the ones who picked up the shares were being greedy and they won. They won out. They got it at a really good price. It's the same thing. This economy goes through cycles. It's affected by what happens in the United States and the world at large, right? And as such, it's not just Sepra that is feeling it as a manufacturer of goods, etc. It's going to be every company that is on the manufacturing portion of the exchange that is going to be feeling it. So everybody's going to be trying right now to curtail their expenses, etc. They're going to be trying to shore up where they're hemorrhaging money from. You ride out the storm. That's basically what you do, right? So for me, nothing's changed with Seprod. As you can clearly see, you have it up there. If you want to look on price and gripe about price, look at the price dip that was there before. You have that price dip at the 21st of March. You're below 55. Well, everybody that basically got in at that point in time, 52. And now we're back up to 60 and a trend in an upward trend. Because that's pretty much what that chart is showing, that its price is currently in an upward trend. It's not on a plateau anymore, right? It's in an upward trend going back to 60. Nothing hasn't changed. So, and fair disclaimer, I have Seprod. I've had Seprod from when they first offered it. I jumped at the chance because I love solid main market companies that are the backbone of the country. Simple. As a long-term investor, there's no reason for me to get rid of Seprod. There's no reason for me to do anything other than add more of Seprod. That's pretty much it. And right now, as it stands, I don't need to use the money from Seprod. And even if I need to use the money from Seprod, the gains that I'm already well above, I'm good. That's just smart, prudent investing, in my opinion.
Yeah, I mean, for me, Seprod was one of those. I remember when I acquired some at $23. I was very happy to do so. And I mean, I don't have my position anymore, but that is not because I don't like the company. That was just an opportunity cost kind of situation. So, I mean, I agree with everything that you just said. It's one of those companies that you kind of expect to be there. The way that they have recovered, I think is quite lovely. And really, it's just to see it's one of those companies that you don't see dramatic movement from all throughout the year, but you may have a key point in the year where it just starts to gain and gain quickly. Because the last time it got to, I believe, as high as, let's see if I can do year to date.
So that's not the part I would be looking on.
Yeah.
Since everybody loves to look on quarters, go down to the chart further down. Let's look on where their revenue really comes in. So everybody can now see 2015, 2016, 2017, each one of those color codes. In 2020, that was COVID.
Yeah.
And their biggest quarter was Q3. They literally dwarfed their 2019 performance all 4 quarters. Cause that's literally double. It basically, if you want to look at it that way, in 2020. Then 2021, we had the node. COVID took hold first in the first part of where we had the spike in people getting sick. And then in 2021 now, the second part of COVID comes in where it starts to hit the performance of companies now because things are locking down. We're going through different curfew periods and so forth like that, right? But yet, still, even after all of that, they still perform better than 2020 than 2019. And I want everybody to see that this is actually one of my major focuses when I look at every company currently. I notice the comparisons that are being done. Everybody's making a comparison of a company putting out 150% in net profit or 150% in some other indicator, But the comparison being made is their 2021 compared to their 2020 or so forth. I want to compare the company pre-COVID. Pre-COVID was 2019. So pre-COVID 2019, here you have Seprod in both 2020 and 2021 blowing it out the water for their for their performance. Look at their
Yeah.
earnings. That's the next thing coming down the list afterwards, right? The earnings is below. The next one is the earnings chart. I mean, you have the performance there again, right? This is your 2021 performance. Yes, it slowed down in the final two quarters a bit. So basically, if we try to eyeball this chart, you can see that there are certain times, as you rightfully said, there are certain times that the company might do really well, and you'd have to connect the dots of what's happening and what's happening at that point where you might like to think about what sales they were doing that really spiked their earnings at that point. But at the end of the
Can I
day,
comment, Chica?
yeah, go ahead.
I was gonna just point out that with Seprod, one thing people had to realize was that, for one, they were selling a lot more goods because the reality was while we were stuck at home, we had no choice but to snack on things, and that was manifested across most food companies. And the environment, what we saw last year was just as crazy because some of these companies are performing above 2019 levels just pre-COVID, along with their quote unquote, so I guess Seprod, yeah, the acquisition already baked in, and they were doing above that. The only problem they were facing was just the increase in gross profit, which is being driven by, well, gross profit percentage-wise, which is being driven by high commodity prices and raw material spikes. At the same time, as you rightfully pointed out, every company I look at right now, I want to understand their show performance. I go back to
Yeah, we lost you a bit,
I
David.
was saying that I actually go back to pre-2019 for
See?
companies
Yep.
because that's the best
Yep.
gauge for me to actually
That's right.
understand what the company is performing.
Exactly. Exactly. I don't want to hear about your 150% that you did in
No, no,
2021
but no,
compared to
but
2020.
here's the thing though, and it's interesting that you said that, Chike, because that's what I see sometimes being used to put companies in a better light
Exactly.
by saying they did, 200% growth on revenue, but that's
Against
because
a
they
depressed
did
period.
nothing. Yeah,
Against a depressed period, like that is what
yeah,
the thing is. It's nice and pretend everything, but at the same time, are they performing materially better than 2019? Because they're performing much stronger, like a Dolphin cover CPJ when they had to become a much more lean and efficient ship. Then I agree with you. You deserve a better stock price and greater valuation, but at the same time, if you're the case where your company, say they did 200% in quote unquote year over year, but
yeah,
yet their performance is quote unquote below 2019 or even significantly below 2019, then I'm going to have that issue.
yeah. Agree. And as I said, I mean, I think this is one of those companies that have consistently performed. And for those, so somebody was asking, why some of the charts only showing three. So a couple of things. Sometimes it could be that the quarter is negative. So in 2019, for example, there's a negative here. So that's why you'd only see three colors for 2019. And for the rest of it, well, the data is here, but it could be that it's so small that you're not able to see it. So it's one out of those two reasons I normally find. But usually, if all the data is here, that's what you want to look for. All right, and we see dividends, they've paid it fairly consistently.
They have their
Um,
meeting for April 11, Jermaine.
say again.
Shepherd's dividend meeting is April 11.
Yep,
That's
yep.
when they're crossing dividends. So, and the thing
Uh-huh.
is, I find it interesting that, despite everything Shepherd is going through, Shepherd is still chugging along because I know for a fact that insurance money already baking for this quarter. So I know for a fact that when you see other income when May comes around, people are going to be like, "Whoa, what's Shepherd forget the other income up so significantly?" I'm like, "Whoa, look at the profit!" But these are not surprises. The thing
Yeah,
is, they had a fire, they had destroyed inventory, they were insured. Insurance money goes to other income, but it doesn't fall under the premise of the company's operations,
Yeah.
which is going to basically create a one-off event. And then when 2023 comes, you're going to be like, why the results drop down so much? And you're going to be like, no, because, for example,
Yeah.
Scotia Group, right? Scotia Group had a significant drop off in their other income line in their first quarter. And when I checked it out, it was because there was a one-off event in the prior period, which significantly improved the that part in the top line area is the operating revenue. But at the end of the day, because their expected credit loss provisions had actually gone down, the net profit marginally went up. So
Okay.
that's the kind of things I think all the time that you don't necessarily have to go and reinvent the wheel. A company has a fire, wake up with Cinco. A company, the acquisition, look at almost any other company on the JSC. A company is doing a joint venture, it's same equity method. So sometimes we don't need to reinvent the wheel. It's really sometimes to just sit back, do a little research, and it will pay off.
Yeah, and what you want to do, so the way that we're talking about this now, these are things that if you don't connect these dots, or as I like to say, pick up on these breadcrumbs, then when it does come out and everybody's surprised, you'll be like, well, kind of saw this months ago. So I mean, again, that's just one way to kind of put everything together. Yeah, so let's I think that, is there anything else you guys want to say about Separate before we move on? Because what I'm hoping to do is recap all of our previous picks and then see if we have any new ones.
Nope,
All right.
not for me.
All right. So the next one that we spoke about.
All I'd say though is that the person get separate right now. The country's open. Look at
Yeah.
traffic. Look at schools.
Yeah.
So all the English persons, quote unquote, not stuck much at home. Kids are very expensive. I'm not a dad, but I know for
Yeah.
kids are expensive. So
And just I'll show this here before we go. The peak just less than a year ago, $82. Right? So just that's what 25%. It's down 25% since April of last year.
And I
Right?
didn't buy it. And I didn't buy it. That
at the end of the day, the company is stronger.
Yeah.
If you feel like if you felt the system was wrong, so be it. But at the same time, the company, and I say about it, all the person going to be saying like, it's company suppressed now go for it. I'm going to be like, that's for you. You are looking
Yeah.
for short term trade. End of the day, a long term investor might still look at the company and be like, they're fundamentally in the right place. Because if you're twice the size of when you were in COVID, sorry, pre-COVID, and you're actually now quote unquote, a lower stock price, that's an opportunity. Like
Yeah.
literally.
Yeah. All right. The next one that we had in mind, let me find it. Next one was
Honeybun.
Honeybun. Yep.
That's
So
still
is that still a pick for you? I think it was, whose pick was it? Was it
that was
David's
mine.
pick? Oh, that was yours. Yeah.
Was,
Boy, cheeky, if you happy you and food company, just let me because no, the thing is that
no,
all
notice me
companies
bakery,
involved in
bakery
baking
now.
or whatever, they're basically slapped by Russia right now with this commodity run. Because it's twofold. Wheat is
This is the
going up,
definition of
flour
flat.
going up.
Like,
No, it's not been flat, but I'm saying that go over here, go over here, Germany. Look at about go over here. That's a year to that's yeah, 1 year. Look at that. You
You
understand?
see, again, this is where the knowing what is happening, or not knowing, but being aware of what is happening is very important. So yes, the it's the geopolitical issue or the war between Russia and Ukraine is a factor, but it has been put out. There's this boogie. This is this. There's this boogeyman number that um Ukraine supplied, or and Russia. Ukraine is actually Ukraine supplied 1/3, 25% of the was it 25%?
33% cheeky.
Yeah, of,
30%.
of the wheat. But did we not recently? I I I shared in our group. If I did, I think I did share it.
I
We
remember the
talked
article
about it,
cheeky.
right? Good. That it's actually not that figure. It's not when you really. put it in place and look on how it is, that's really not the number. No,
Nobody
here's the
fact checks GK. Nobody fact checks. We're in a literally a world where
correct.
you put something out and you take it as fact.
Right. And
So
what happens after that? Nobody fact checks and then they run out and go selling. Panic. No, when we take it
remember,
into context,
confess is a word. That's a Trump word, and it's a real word now.
well, we're going to take it into context that having obtained new information, because that's what you're supposed to do as an investor. When you get obtain new information, it's supposed to inform your decision to stay, to go, or to just hold fast for a time period.
Yeah.
Now that we have new
Chike,
information,
well,
yeah.
Chike, I was finishing there earlier, so I was saying that you have the wheat issue, which is one angle, and then the second hand now, distribution costs are going to go up because remember, and this was in my article recently. Remember, they own their own trucks. Not all. I don't think they own all of them, but they own a good number of trucks, right? We've seen gas prices gone up almost 50% over a year,
Hmm.
and then we see gas prices go up $4 today alone. So that's something to consider. And then
Definitely.
yeah, also to
Definitely.
keep the oven hot on, the oven is going to basically be impacted because of the higher cost for fuel. So I agree about the fact about the considering the wheat situation and the quote unquote fear mongering that's out there. But we still have to look at the reality, which is these prices are not coming down so quickly as we'd want them to. They're quite volatile still, but they're materially above where they should be. Because I remember when years it was I was like around like probably $70, $80, it's even $100. And all of the major commodities in this case, like in this case wheat, are still highly elevated.
Right. My
So,
counter, my counter to that was always this. Um, are we gonna talk about it? Let me see something. Was that one of our picks? Yes. Like one of our picks that's coming up. As a matter of fact, it's going to be the next pick that comes up. Like that company, Honeybun as one of the companies that, based on the products that they provide, they're not easily substitutable like that. Yes, there are other companies that you can get the baked good products from, but they're popular. Go into any supermarket and you find honey bun products all over the place. And what has to happen in most businesses? A business can basically take on as much and not pass on, but at some point in time, margins need to be maintained. So they're just going to pass that price on. Now, here's the thing about their economic moat. If it is that people can find a alternative, a substitute, they'll go there. That's no question about it. That's a given. Will it happen? It will be left to be seen. But I'm willing to take my belief that Honeybun has a strong economic moat and they're going to be able to pass on that stuff and maintain their margins.
No, I agree
what
with you, Chike, because when you look at the honesty, Honey Bunny is one of the better run junior market companies in all honesty because say about the company is increasing profits year over year and increase revenue, but the company actually is run like a business. So if I say it like that, but I say just and it's true. Like if I say a sufficient amount of cash reserves, have investment in bonds and stock, just like everybody else right here. They always, have a particular amount of inventory on hand to account for different events. And
Hmm.
management and the board actually inspire confidence based on what we've seen all this time.
you know. So I'm looking at their 3 months here, right? So the very first thing that I would notice seeing this is that the company lost 4.7% in margins due to significant, right? I like to look at certain words in a significant price increases on all inputs, right? And we're talking, and this is for the 3 months ending December. And we know the thing with Russia and Ukraine will be impacting the next 3 months, right? So if the lost margins due to those inputs, I'm guessing that this may not change for the 3 months that we're in right now, right? So no, I'm not trying to break the thesis that you guys have on it, but remember last year when we spoke about indies, we spoke about those shipping costs impacting their numbers, and that's what we saw, right? So the good thing that I see from them is that they would have invested some money in property, plant, and equipment. Usually, when you invest in those things, it means greater output, etc. But I'd be watching costs closely for Honeybun, and if they can't manage those costs, then they can't, as David would say, surprise us. So I
Well,
mean,
something else at Germain. All everybody going to be like, Honeyman gonna pass on costs, and or these some of these companies kept gonna pass on costs. If our Jamaican companies were to actually pass on the real costs being felt
We
overseas to the general population in Jamaica, I know for a fact that Lasco would be milking some serious money now.
yeah, yeah,
And I think this is the truth because companies are they're going to be like, oh, businesses are going to increase prices the same way. Yeah, they increase prices, but they don't pass on the real cost to the end user. Because the thing is, we have
it
been
would
blessed
hurt
as a company that
a lot.
they've been
Yes, it would
absorbing a lot
hurt
of
a
these
lot.
costs. No, I mean seriously, German. Like, if these
yeah,
companies
man, yeah,
really
man.
pass on the cost, cash. No, like I think about German. Shipping cost was $2,000 pre-COVID, right? Or even before pre-2021. So it's still over $15,000 US right now. And then you have all these other costs you have to account for. Companies put more their cash flow to because I mean, it's more the cash flow to cover uh the the delays in getting goods. So
Mhm.
I think so. The thing is, although you're rightfully saying that and you pointing it out that we might not be surprised with Honeybun. On the flip side, we can't discount the fact that schools are open again, and this is Honeybun. They're always innovating.
Yeah, yeah, yeah. So I mean, so those, notwithstanding the points that we saw in MD&A just now, I mean, these revenues are actually for just one quarter is actually quite impressive. And what I would be doing here is looking at the gross margin, and I'd be doing the same analysis that we show you guys to do on the income statement, and just looking to see,
You notice
I mean,
you notice
yeah,
the EPS went up by 3 cents, right?
yes, 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 yes. I'm actually seeing that. So
So go to
that makes me more interested. Where are they now in terms of their listing cycle, David? Are they listed more than 5 years already
Tax
for the
tax
market?
Germany, they listed back in 2000 and June 2011. They've already passed 10 years.
past
Okay,
that a
okay,
So
long
okay.
time.
Yeah.
So
But
for
All right.
context,
better
what you're seeing
better
right now, go back down, Jeremy. Go back down to the tax line, right? Go back to the tax line. So
Yeah.
for context, what you're seeing right there, and for those who are probably new to our show, or I should say your show, is that coming into the Nigeria market benefit from the first 5 years of no income taxes. So like any focal JFPS per tree, them can look at the government and say hello and just walk past. And for the remaining 5 years, companies pay 50% of the normal rate. In Jamaica, 25% is the
25%.
normal rate for regular companies, and it is 33.3% for regulated companies. So those are regulated by the OUR, regulated by FSC, BOJ. And to put that into context, when Honeybuns was tax period could have ended back in June 2021. So December
There you go. There you go.
2020 that you're seeing right there, they made it a 50% rate. But the period you're seeing right now, we bet the normal tax rate. So the thing is, when you're
Okay.
looking at Honeyburn right now, you have to also account for the fact that you're going to be seeing higher tax lines, which is going to impact the bottom line, in this case, net profit.
There you go.
And
There
this
you go.
isn't a surprise. This is a surprise. It's actually something that's a function that you should be tracking for every Jamaican company because I have a spreadsheet with it. So that just give me a context.
But
Yeah. Yeah.
and the good context is this: everything's going technically going up, but yet for them it's going down. SG&A, as it's called, selling, general, and administrative expenses. That same line you're on went down from 47 to 39.8 based on that quarter. When you go across, right? All of those good stuff in managing your costs ends up with them having a higher earnings per share. But we're not even going to I'm not even going to focus on that. While this is important to focus on, I want to zoom out.
Look at your cash flow. Look at your cash flow. That is the real money maker.
We don't even need to go there. We going there next, but 'cause that's really where I want to stick because that's where shine big time.
Are you guys seeing my
It's
screen? I
blurred.
tried
No, it went
zoom.
blurred just
Okay.
now.
All right,
It's
hold
blurry
on.
now.
Yes, very blurry now. But let's see if you'll get it back.
Yeah.
Well, what am I on?
What's the window to go through all the tabs again?
Um,
What's the shortcut key?
Alt tab.
Okay. That's what I'm doing. I'm escaping and it's
It's
not
back.
going through. It's back?
No, it's back normally now.
You're
But
zoomed in. You're zoomed in.
okay,
Yeah,
good.
better.
All right. It
Yeah.
was better just now. You zoom back in again.
Zoom back in. Ah,
No,
boy.
zoom out now. You have to zoom out. All right. Let me pull what I was looking on.
Okay.
So what I was looking on for my side was this. I was looking on their quarterly performance. And here we have a nice performance going up, right? If you were to trend this line, it's going up nicely.
One sec. One sec.
And
One sec. I think I'm still showing my screen, but
oh
my
wait,
key is not working.
no, hold
Thanks.
on. It's fine. 1 second. I know what just happened. Um, all right, I'm now sharing mine for sure.
You are?
Yeah, David, you should be seeing my screen now, right?
I see it.
Good. Right. So I was showing that as we look on the performance each quarter on quarter, Honeybun has a nice upward sloping trend. 2021, best performance again, right? For the last, what is this? 15, 16, 6 and 5 is 11. Right. So 6 years, basically. And then we have 2022 that has come in. And look on this blue block compared to this blue block, which was their Q1. And you can see it's a better performance than before, $45 million versus, well, this is 218 million. I'm sorry. This is the total,
Chike, I'm not seeing your
34
screen.
million.
I'm not seeing your screen, Chike. Are you just speaking from the document?
No, I'm actually speaking from the, oh, it hasn't come up. I'm sorry.
Yeah,
One
man.
second.
That's
Yeah, that's
that's
what I was
that's
pointing
what
out.
I just realized. I'm trying to zoom out and it's not allowing me to. And if
What
I
I was
end
gonna
it,
point out while you were talking, Chike, was that people need to remember Honey Bun sells bun. Not the Jamaican bun, but the bun you eat.
That's true.
And for persons need to remember, bun season really doesn't kick off until around like a week or 2 weeks before Good Friday and Easter Monday. And in
And
this
that's
year,
coming up
the
shortly.
15th and the 18th. So what does that mean? You will not see these material numbers come out until August.
Right. Right.
all right,
So
guys.
although kids are back in school, although kids are back in school, although kids
Yeah.
are back in school,
You
Yeah,
all
they're
right,
they're
man?
not, they're not gonna. Oh, you just choked it. Yeah, that's true. Although their kids are back in school, we're not gonna actually see anything for right now. And I'm so sorry we can't see it. I'm not sure. Jermaine, you got it
Yeah,
back
man.
as it was.
I'm trying to figure it out now. One sec. Just keep talking. I'll probably just edit this part out of the video.
Yeah. Because I wanted to really show everyone. But if everyone just goes on the Jamaica Stock Exchange's website and you look on Honeybun, just pull it up, instrument lookup, HONBUN is the ticker for them. You will see
what
that
I was what I
currently.
was what I was gonna point out here was sorry about that. Uh, what I was gonna point out was that at the AGM, what they pointed out that here, although schools are open, they're not quote unquote saying that you're gonna see a material move in the actual sales. Reason being, kids were selling the 21 products when they're at home. They go to school, they see the 21 products.
Chike, sorry, one sec. You can go ahead and share now. Let me try to bring that up while I
Yeah,
fix things on my side.
let's see if it's gonna work.
Sorry about that, guys. That seemed to messed up something there. Let me know when you share it. I don't see it yet.
No, not this. Hold on 1 second. Let me just move it. Let me just move it to a new window first. So I can basically, there we go. Good. Right. So everybody would be seeing it now.
Yeah, everybody should be
So
seeing
as
it.
a so nice upward sloping trend, as I was saying, for their quarterly performance year on year. In the Q1 of 2021, that was a $34 million, 35, call it 35. Let's round it off. $35 million. In 2020, $49 million, $38 million. In 2022, they already hit $45 million. Well, call this 46, right? So they've already made close to 2020 in 2020 in 2022, and everything has just been opened back up. We're gonna have a nice rousing Easter. People are going to be buying their buns, their different stuff. Yeah. So as David was saying, school is back. So that's them. You look on their annual earnings, this is them. Nice upward sloping trend. So for me personally, well-run company as well too, because I did them as well. Disclaimer: I don't own them as yet though. But at the end of the day, still, I mean, if anybody got skittish because of the situation, there's no doubt it cannot be ignored that wheat grain production is required, but at the same time, these companies find ways where they need to source their raw materials from. If I'm remembering correctly as well, too, David, didn't the head of it was it Honeybun that came on? I think it was that same the head of them.
JMEA National Baking Company. Who?
They,
Talking
they
about
came on and
Metro Tiaga?
no, it wasn't Siago. Not it was for Honeybun that came on and said they are aware of what is going on. And for that, in terms of the supply of wheat, and for that they've been ensuring that they can stock and store, right? To meet demand, basically, right? So, I mean, in my opinion, um, let's see what the company does, but they've been doing their stuff. And as again, everybody knows me, I'm long term, so if I'm going long term, this is not going to be something that I'm overly concerned about.
Chike. Is where I'm coming. Somebody asked me if I've coin, and I'm like, no.
No,
I had
absolutely
some
not.
food a while ago. I had some food a while ago, and I was finished, and then I had to stop for no reason.
That's none of that. No worries, none of that. Don't worry about that. Yeah, so that's where I'm at with Honeymoon. Still solid. Still believe. Again, there you go. And here's a company that, and that's the what should be more should be something to look at for a company like this. Here's a company that is not enjoying the benefits anymore of the junior market. They're paying full
Yeah.
tax. They're doing what they're supposed to, and yet they're that's the companies I like to look on. Uh, like every time when I did the analysis on them in my, they came up pretty good, right? So yeah.
Okay. All
And
right.
Chike, I want to point out that, when it comes to the German companies that, no longer the tax break, most of them are still thriving, minus the access and the lack of financial and the CPG and Dolphin Co. But otherwise, all the companies that would have, been benefited in the first stage of the junior market in terms of being early listing companies, they are performing better than when there were tax breaks. So all that showing is that these companies, they're not listening well to go to business and are just continuing the same operation.
And getting better, more efficient, I should say, more efficient. Yeah.
Yeah. All right. What's the next one, Shike? I still have not been able to
That's
fix
for all
my
of y'all.
signal.
That's for the two of y'all to talk about. Have at it with Fesco.
Oh. All right, David, you go first. Fesco, what's your current outlook on it? Because based on where we are right now, how you feeling about it?
Gas just went up, going up tomorrow by $4.35.
Let me comment on that, Cheeky. So, a couple weeks ago, there was already that story about that in terms of, comparing Observer compared the through the data of the CAC, how much money gas stations are actually making in the margin, and it was actually getting compressed. So when gas prices increase, especially to where they are now, all that does is it forces the gas retailers to become more competitive on price and not pass on all that increase to the regular end user. And what that does, it actually impacts the amount of profit they can actually retain. But in the case of Fesco, they're focused heavily on volume, which is what any gas retailer should be focused on. The more
Mm-hmm.
volumes you sell, even if it's at a lower price, you can see materially make a difference in your bottom line, in this case, profit. The thing is, when Fesco results come out all the way in May, I'm not going to be surprised if I'm going to be like, wait, uh, well, at the end of May or at the start of June, because tomorrow is the end of their financial year. For those who don't know, it's March 31. What I was going to point out was that remember, being like, I could so good. But the thing is that he was remember, Fesco Beachwood is now open and is now basically Fesco shareholders' only gas station was in Kingston. And Fesco owns Beachwood directly straight. And the thing is, the country is open back up because the traffic on these roads is not pretty.
Yeah.
And more
Very
traffic
true.
equals more gas being burned. Persons where companies are saying, yo, work from home, not get scrapped. Come in. We don't have nobody at home. So,
Yeah.
persons who before used to be commuting, the community actually staying home in St. Catherine, for example, have to travel again.
Yeah.
So, a company like Fesco is going to benefit a lot more from this country opening, even if they were to not necessarily maintain the same levels of profit margin. And what they mean by that?
Yeah.
So Fesco will technically suppress their own prices, skip a little bit of some of the quote unquote they could get to continue maintain the same amount of volume they're selling, and in turn, as a result, be able to actually drive greater profit. Because the thing is, people are going to be surprised even further that with these higher gas prices, because revenue is going to look astronomical. Wow. But the thing is, you have to remember, Fesco does not control gas prices.
Right.
Petrojam has a price that they change every Wednesday to their committee to check. Fesco adjusts. So when gas was saying, for example, I got 160 last year, then she can take over.
Okay. Yeah. So I mean, as it stands, everybody just really likes Fesco. Um, and not without good reason as well too, because as you can clearly see, with again we come back to the whole geopolitical situation, the war that is going on, that has basically caused gas prices to increase and keep increasing. So, I mean, for me personally, I looked on it and saw that what did we have? We had one recently where we looked on the different stations, and it would appear that Fesco has pretty competitive rates in terms of in at least in Kingston, where I am. I saw that the one that is on Beachwood, actually, that same one is a pretty good price. So with everybody being requested to come back to work and persons having to drive again and so forth, there we go. I mean, it's pretty much a given in what is going to happen with them. Then as well, you have things that bode well for them as well too. Today, basically, was put out that all of the Fesco shareholders are getting a dividend, albeit it's 1 cent, but still, company has literally just IPO'd, done, they completed their IPO. They haven't really, they've gone now. They're gonna complete their year, and they've already rewarded you with a dividend. That bodes well for the long term shareholder who has good volume. Because when I say good volume, you have to have good volume to have picked up a pretty penny off of that, based on the price. But actually, Lori, happy for once. Yeah, you could actually be, because if you have 2 million shares, then that's 20 grand. So if you have 500,000 shares, it's about 5 grand. So that's what I mean by good volume. You have 2 million shares, it's $20,000. So you know, in that 1 cent, basically. So that's basically it. Now you have the figure is 2 million. 2 million shares at 1 cent will give you 20 grand for your dividend, basically. Listen, and that's what investing is. Don't look on the if you like the company, you're supposed to basically be buying up until you get to your allocation, your target allocation that you want, right? So, I mean, that's what it is. Some companies give you income, some companies give you capital gains, as they call it, when the price goes up. So that's really where it's at and what it is. So yeah, but for the foreseeable future, hopefully not short, but Fesco is going to ride a high based on the fact that you have gas supply issues. If the price of gas just keeps rising, which I can't see that being sustainable, because that then impacts, because gas is the primary, is petroleum is one of the primary things that goes into all of our stuff, right? For electricity, etc. So we can't have a continuous rise without any significant pullback, right? So something has to give at some point in time. But based on what Fesco has done, they're sitting pretty good. As David mentioned, they did the bond. That bond is a very good lifeline for them to basically restructure themselves in terms of their debt, so forth, and keep moving forward. Keep coming back better. So let's see where they are with that. I'm not sure. I think we lost Jeremy now. I'm wondering if he's coming back. But yeah. But after Fesco, what did we have as our next company? I would have loved to actually get Jeremy's input, because he actually really likes Fesco. So, so when he gets back on, he can give that. And the last one that we had done, that was actually my pick, was Fontana. And where are we at now with them in terms of? Let me see now. I'm gonna bring them up. Fontana. And then I'm just gonna do a share, so we can look on the. Is it up? Should be up. All right. So right. So where we at? We've got Fontana's price currently down, but in an overall scheme of things, their price is flat. As you can see, looks like they've plateaued for the last couple of months. This is going all the way back. So they've been stuck at 972, just at or below 10 from since early time in March. They hit a peak of 1186 and they're back down. So I mean, this is price stuff, but I'll get straight to what I like, as I've normally said. Performance, and here we have for Fontana. We haven't gotten anything for 2022 as yet, but we got for 2021. Really good performance for 2021 based on 2020. And that 2021 performance, more importantly, is better than 2019. So, I mean, as it stands right now, we can see where Fontana goes going forward. Um, we've got no dividends for 2022 as yet, but you got a late dividend at the end of in November. So pretty much in terms of, let's see what we have. Let's look on the last quarter. Oh, good. So we go with the last quarter. That was their last report. So I'm gonna go with that one. And we see for their performance. Here's the thing, Laurie. Again, waiting for a price to drop on something. That's Look again. Let's take a look again. This price has been at a high of 1186. There would have to be something extremely unfavorable to make Fontana reach back to $7, right? Pretty much. And if they're doing what they're supposed to do, then this is the funk that they're in, or the slump that they call it, they're in, where they've plateaued, and then we go back up again. Should be, that's the expectation. But let's take a look at those. Let's take a look at the quarter that was put out, which was in December. So we will see that in their report, even though they had an impact of COVID, I'll make this a little bit bigger. Despite the impact of COVID, their revenues for the quarter increased by 20%, right? That doesn't sound to me like something that's going to stop the price, or make the price drop back a little, right? Continuing on, you have all of the stores. All the stores have been open for 2 years. This is a 20% increase that can be considered organic growth and not reflecting any temporary boosts. So this is very important. The wording is very important, and it compares favorably to the 9.6% reported by the Planning Institute of Jamaica for the island-wide wholesale and retail repairs, installation of machinery and equipment sector. Now, they are doing basically better than the entire sector. Realize that in their last quarterly report, based on what they put out. So I guess they're really living this mantra. It is really all good inside of Fontana, right? Um, so yeah.
I can hear the bias in your voice, man.
There's no bias in my voice. I'm actually putting back how it is. It is what it is.
Right.
You can't ignore numbers. There's qualitative and quantitative. I'm always on the quantitative side, and
Exactly, exactly. You're always on the quantitative side.
you can't ignore what it is. I mean, the company is doing what they're supposed to do. Here you have growth sales. Their cost of sales grew by 24%, impacted by, apparently, this is big, an unprecedented 500 plus increase in the global container freight shipping. Yeah, we knew how that hit everybody. Everybody was crying out for it. But still, at the end of the day, this is what you expect companies to do. Recognizing the challenges faced by consumers, Fontana chose to absorb a percentage of those unexpected and unavoidable costs in order to minimize the impact on our customers. As a result,
But
they have
hold
taken.
on. That's interesting, you know. There was an unprecedented increase of 500%, and their cost of sales only grew by 24%. That's interesting. That's very interesting.
Is well, it's going to show up, because at the end of the day, you're going to see the cost of sales. So whatever goes into making the products, or having stocking, sorry. Because the truth is, you have to now ask exactly what we started off the program and discussion about what the company is, what does the
Yeah.
company do, where does the company generate its revenue, and their cost of sales. You will look and see what is their primary revenue earner when you look down in their financial statement, basically under that note that's supposed to be there for their cost of sales. Well, if there's a note, there isn't a note
I
here,
mean,
but like,
for companies like this, you definitely, right? It's retail. You definitely have to be looking at cost of sales, right?
yeah,
That's anything impacting that is going to be an impact on profits.
right, yeah. So, and as you can see, and seeing that Fontana is still within the junior market, where they are not,
Yeah,
they don't have to pay
those
tax.
benefits. Yeah,
Notice
yeah.
there's no taxation charge, so they get those benefits. I mean, let's look on what we're looking on here. So net profit for the quarter of itself is up marginally, right? It's still 248, but it's 248 with a 836 200 versus a 573 661. So notice that nothing hasn't changed with earnings per share. It's basically the same, because it's really just a marginal change. But then persons would argue that you have to look up further, and we look on gross profit, which really did have a bigger change, 717 versus 621, right? Now this is the part I choose to look at.
Is it the reason why I mean we can't do this here because it's stocks to watch, but if we're doing the stock review, would have looked at the percentage, because a number being higher doesn't necessarily mean that the
So I mean,
percentage margin is higher. So just
yeah,
wanted to add that.
yeah. So it is what it is. I can't knock Fanta, but we had spoken about that. We expected that, basically, because they were good in the e-commerce space. They had all of their places open, etc. Um, they only stood to gain, right?
Yeah.
As a matter of fact, wait a second. Price Mart opens next month. Isn't Fontana doing the same thing over in?
2023.
Okay, all right. So right.
2023.
So
I
yeah.
have that bookmarked on my calendar. Don't worry.
Mm-hmm,
See right
mm-hmm.
there, permission to be by 2023, which means it can be either this year or early next year.
Right. So there you go. Another expansion, hand in hand. I mean, yeah,
Yeah.
they got their stuff going on. But let's take it before we move on one step further, which is the last thing. I mean, okay, we know they've been managing, but let's see what that cash looks like. And their cash is wow, like wow,
Okay,
like
that's not
seriously,
bad.
like seriously, wow. This is their entire audited year. This is their unaudited for the period.
Do we have anything
This is
coming out
this is
projected about the cost for the new location? I figure some of that cash may be going there.
well, as I've always said, a company who has solid cash flow can do many things. They can expand, they can pay you some extra money in capital distribution, or they can make sure they remove debt even more.
Yeah.
This figure is double this figure.
Yeah.
They're
Yeah.
really in good standing, like in excellent standing. So yes,
Yeah.
those who know me know that I love to see a company like that that has really good cash. I mean,
Yeah,
so
man. We know you. We know you're biased in that way. Um, all right. So you before we move on from Fontana, I think David is still away for a sec, but we're talking about Fesco.
yes.
I mean, I am bullish on the company for many reasons. You know, one of the obvious things that I said is that it is a unique company on our market, meaning there's no other company listed like it. I think that they have a great opportunity with new products, acquisitions that can potentially happen. I mean, look at the response to the market today to another company that did an acquisition. Now, I'm not saying it's the same type of industry, but I think Fesco has that potential. And based on the size of their market share coming out of the prospectus, to me, when you have a small market share with adequate capital, you can begin to get a bigger and bigger slice of the pie. And so I have nothing but like I can't think of a bad note. I mean that dividend is not going to do anything for me,
Yeah,
but
I, yeah,
but
yeah.
I mean the fact that they paid a dividend says something. I think it shows their 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 intent, and that dividend can get better over time, right? But the
I
fact
don't
that they
even
were
care.
able,
I don't care about
yeah,
that. I go back to the prospectus. As long as they're performing at or above the projections that they gave in their prospectus, that's it for me.
yeah,
That's what I'm holding them to account because they actually stated in their prospectus what their projections are, and that's something that everybody in
really admire that, by the way.
really should look on. A company
Yeah,
should give you projections that are realistic, and you should hold them to account. You should already know. For me, I am hard and fast with that. If you come out and tell me you're going to make $10 million going forward and an increase of 10 million every single year on that 10 million, the moment you slip, one, I'm going to find out why you missed it. Two, I'm going to identify if it's basically going to be an ongoing or what they call growing concern. And then
yeah,
three, if it is, I'm getting out of there because I know that
fair enough,
you basically can't do what you're supposed to do.
fair
So
enough,
I
fair
love the
enough.
fact that I can hold companies who like Fesco and so forth. I can hold their feet to the fire because they've given me a nice runway for the next 5 years. And by the way, Fesco isn't unique. Yes, they're the only gas station company, but Trans Jamaica is the only highway company, and also they have projections too. They have a 5 to 8% projection going forward up to what was it 2025, and then
Yeah,
thereafter
yeah,
they have a ridiculous 23% projection of dividends. Like if they pull that off, that is
I
just
remember that. I remember that. Yeah.
to the moon. Like I don't even care about. Yes, you're going to get at that point in time at a 23%. That price is supposed to be astronomical at that point in time because
I would.
if they even pull that off once, like everybody's going to run in like
Yeah, man.
crazy.
I would love that. I would love that. I'd love
So,
that. So there's something that you said that I wanted to go to. But I missed it. We'll get back to it. Guys, we're about halfway through the video.
so now we
I'm
start
not
the new ones.
I'm not seeing enough likes on this video. Please, guys, 99 persons here. Please like the video. It helps the channel greatly. It helps us to be able to keep doing what we're doing. It helps us to reach more persons to add to our community. Please take a moment to like the video. Really, really do appreciate it. And if we're able to get to 150 likes by the end of the video, I'll share a bonus pick. Let me do it that way. All right.
Uh,
So yeah, let's talk about the next one that's on the list.
Now these are the new ones now because we've actually gone through
New
all.
ones now. Okay, perfect. All right. So the first new one for me, you said it just now, Trans Jamaica, right? I've can you bring them up? Bring them up.
Yeah, 1 second.
So we did a full stock review on them a few weeks back. It's just now after 2 years, almost to the day, isn't it? It was in March, so almost 2 years for it to get back there. And of course, for me, there are always multiple opportunities to enter a company. Where did it start the year?
Started the year down at 120 odd.
Yeah. So
You're
it's up what? 10,
140,
15,
20%.
15%.
Is it 15 or
Look
20?
at the year to date down the bottom in the summer there.
16%,
Yeah,
17%.
right.
Long it off. Yeah.
Yeah. So I mean, in 3 months, it's sure it's not as per tree, but this is a dividend stock, right? So for me, of course, all the things we mentioned about Trans Jamaica, their business, the things that impact their business and their ability to generate revenue to me will always be there. And if we're coming out of the pandemic, it bodes even better for them with more activity, more use of the highway. They also mentioned something recently about the ability to take on other projects.
Yes.
You saw that note?
Yep. Culverts,
Yeah,
etc.,
man.
etc., etc. Yes.
And I think there was something in the prospectus which spoke about did it speak about opportunities outside Jamaica or something like that? Do you
I can't
remember?
remember. I can't
Yeah,
remember.
but I'll look into that. But they are my very first pick for this quarter that we're in. I mean, for the rest of the year anyway. Something that I'm counting on for a good dividend payout and good performance. So I'm expecting both from them. All right. Yeah, so Imran is confirming they spoke about opportunities outside Jamaica. So there's also that. So I mean a whole lot of pluses that are going well for them.
Yeah. I mean, you got Williamsfield section of the road down to Manchester, to Mandeville, etc. That's coming along. You've got everybody going back to work, basically. Um,
Hmm.
you've got the fact that most persons, if once the road is done properly and everything, if there's some kind of reduction in traffic, you can definitely see more persons looking at the costs and realizing that, or making a trade-off that it makes sense to not be in Kingston anymore. And it's easier to go out and live further out because it's easier to get into Kingston. It takes you 45 minutes and you're in Kingston, kind of.
Yep.
So,
Yep.
I mean, there are good things about the company. And again, you have a prospectus to hold the company's feet to the fire, which they've basically been performing so in the current stage in terms of payouts in dividends and so forth. So I mean, you can't
Yeah,
knock it.
and for those who are saying, they haven't been performing since IPO, if you've been holding since IPO, you got back what you'd have been down in dividends. If you held for the last 2 years, you'd have been down what, 15, 20%. I think it went as low as maybe 115 or maybe $1 early out, and then it recovered to about 120. But you'd have gotten back your money in dividends, and you could have reinvested those dividends into more shares. So now that it's back to IPO price that you didn't pay any fees for if you bought it at IPO, because that's the benefit of buying at IPO, you would now be ahead 2 years later, more units, and now ready and positioned for potential growth. That's my outlook anyway. So yeah.
Yeah. Yeah. So
All right. So what's yours?
well, that was actually one of mine that I had in terms of that stuff, in terms of that qualitative and quantitative as well too. But
Wallet?
let me not go with the popular one because that's popular for everybody. The one that I am choosing to go and look for, and it still falls in the industry of services, which Trans Jamaica is in. At least that's what I have it in. Is Knutsford Express,
Ah, interesting. All right,
because
bring
the
them up.
entire place is open now, and I'm going to say the reason why I'm picking Knutsford Express is because we know that that company, in terms of transport, we got a nice new terminal in Drax Hall. We've got uptick in tourists coming to the country, people in
This is
general coming to the country, and so
not
forth.
not. This looks like a lumpy chart. Good. The 1 year.
In 1 year, flat,
Yep.
for the most
Well,
part, flat. And
the line
anybody who's picking, and
from
anybody
about
who picked it
October,
up,
sure.
all right, and anybody who picked up the dips, all praises to you.
Yeah,
Um,
but you see, Chike, the volume makes me nervous here because you see that large one there in October for 381,000. Outside of that, like it's
September.
peanuts yeah, in terms of volume,
Okay,
right?
so we've been talking about that, if you remember correctly, and we've been
Yeah.
talking about companies that the volume is not there, but when it's ready, all of a sudden it jumps
Yeah,
in.
man, that's true. That's true. That's true. That's true. Because I
Supply and
just look
demand
at,
is right. So
yeah,
supply and demand is about
500
volume,
million units
right?
outstanding. So that, yeah,
As soon as
that's
as if this company does what it's supposed to do, as soon as it starts to do its performance the way how it's supposed to and the way how the market here normally reacts, then there's going to be a
you think the
squeeze
volumes will come.
because
Okay.
there will be no supply and there will be heavy demand. And at some point in time, when the price starts to go up with that heavy demand, then the volume naturally comes in because people are going to
Fair
take their
enough.
profit,
Okay.
right?
Well, I mean, in the
But my
last year, it was as low as $5.51.
right now,
So
I have a
yeah, so
problem. This They haven't done the update of the stuff, but 2019. Let's fine. Let's go with this. So 2019, this was not for the Express, right? Quarterly
mhm.
earnings, and they were on a solid, steady trajectory upward, right? Then COVID, and everything has gone sideways. All right, cool. So let's pay attention to
Well
2019.
then, so that means that this is one of those companies that you can hear 100% increase in.
No, no, I don't really care. I don't care. Again, I keep saying I don't care. I don't care. I am going to now look on. I'm now going to look on. Let's see now. Let me close the other stuff that doesn't need to be here.
Yeah,
Let's take a proper look.
it's all about the narrative, man.
Yeah, I don't care for narrative. I walk right past it. So their financial year. Let's see what that looks like. All right. So we have a financial year. So their financial year ends in November, basically. Well, not ends in November. Sorry, it is. This is published in November, so this has to be what, a month, 2 months before, right? So there's an addendum. Sorry. Let's see what's going on here. All right. So when does their year end? Um, sorry guys, we're gonna pick it up quickly.
That
Financial
that
year.
music is in your background, right?
Pardon?
That music is in your background, right? I
Yeah,
just
it
want to be
is.
sure.
It is unfortunately. Yeah.
Man, it's fine.
Um, financial year ends in May. Okay, so May. All right, good, good stuff. So we are in March, right?
Oh, by the way,
So
I figured out why we didn't see any data for 2021. It was all negative. It was all
yeah,
losses. Scroll down to the table. No man, leave that open, but go back to the JSC page. Scroll down. Go to the JSC page and scroll down. Yeah, scroll down below that. See?
yes, okay. And then they didn't have anything,
And then for 2022
right?
they're
So
showing
let us
positive, but yeah.
right. So let us establish about Knutsford Express. What do they need? They need ridership. They need passengers.
Yeah,
They
they
have
need
buses.
deliveries. Yeah.
Correct. No, not even deliveries. They need passengers. Their core business is passengers. So until they change that over, it's passengers. So the
Okay.
deliveries is one part, but it's passengers. So they need ridership. So with everything thrown open now, airports fully functioning. Once we get the passenger flow through from airports, um, let's see if Knutsford Express can go back to pre-COVID performance and
I
do
think they
better.
can. I think they can. So they're
There's a
definitely one of
scope.
those companies that seem quite positioned to do so. The thing is, though, at this point, you may have to be patient, but I'm thinking by Q3, then I think they would be positioned to do pretty well.
It's a big spoke in.
Hmm?
I'm about to show you a big spoke in there, wheel. 1 second.
Yeah, go ahead, go ahead.
So can I find it? It came out recently in the Ford Express was planning to that not Ford Express does. And Juto is a bigger in my island wide, right? I see that Juto can basically because it was a direct Juto would basically become a direct competitor to Knutsford Express in my opinion, right? Because Juta has never really cared about that, or maybe they have, but I think that what has happened really taken a bite out of them, and they've basically now been looking at other avenues of economic moat.
Okay,
So
okay.
that's something to watch, in my opinion. But if everything goes okay for Knutsford Express in terms of where it is right now, then we will look very, very, very carefully at if they will come back to 2019 performance and better.
Yeah, I think they will. It's just a matter of, as I said, give it like we have to watch them closely. No, this is definitely not a pick of mine. I'll tell you that much.
And
But if I was holding the company, I'd be looking at how they do for at least the next quarter or two. Because if they did 9 million for 2022, Q1 and Q2, let's say they do 20 million, 25 million, then you can expect Q3 to look similar to what it would have been before the pandemic, as in at least headed in that potential direction. We don't know what the cost, if the cost would have increased since then. So you have to watch those things closely. And as you said, it really depends on that ridership that is there for them. So to me, it's one of those things that you have to be yeah, Robert is saying that a great factor for them now is going to be gas prices in terms of threats to profit, and competition in terms of maybe other companies seeking to do a similar thing. So I don't know, Chike. I can't be bullish on a company with the rising gas costs and the competition, the low barrier to entry for the space for them. That would be interesting for me.
well, the market does weird things, so I'm just looking at it's way out there.
Mm-hmm.
Next thing you see,
Okay.
you see a report that pops up that says Knutsford Express did this,
Yeah.
and we're going to be having a different conversation at that
Here
point in time.
they shattered the previous numbers by, yeah,
And we're gonna be having a different
previous what?
conversation at that point in time.
Yeah, because bear in mind everything last year was negative. So once it's positive, they're going to beat all the numbers for last year. So just bear that in mind. So if they do 33 million for Q2, you're gonna hear 200% growth in revenues
Yes,
because
yes.
they're coming from negative 33. So just
And we
bear that in
remind
mind, guys.
and we remind everybody to go back and see what the true thing is pre-COVID, which is the 2019 period, and see how that
Yeah,
stacks up.
yeah. Which. Ooh. But to me, well, I don't know. I don't know. It's. Let's move on. The next pick is for me, right?
Yeah.
So I like. Hmm. Do I want to share this one? So there's one pick that I'm not ready to share. Uh, let me check something. Go ahead with your next pick, Chick. There's one pick that I don't know if I want to share yet. Um,
All
so
right.
you go ahead. Mm.
So my next pick, and I hate the fact that I'm actually going to pick this because I'm putting this out there because I did not want to use any kind of IPO companies, but the reason why I picked it is because I can't
Wait,
live
hold
with it.
on, hold on, hold on, hold on. Go again.
I didn't want to pick any IPO companies.
Yeah, I'm
I don't
I'm,
like.
I'm
I
waiting for
don't
you
like.
to say
You
the
know,
company.
it's not. I don't think it's. I don't think it's what you think I'm going to say. By the way, tropical battery,
Oh wow. Okay.
and I,
Interesting.
and I said to the group why, and it has nothing to do with the fact of their performance. It just has to do with the fact that. So remember, I had put out the prediction that I had. I was trying to speak into life indies
Yeah.
and what was going on with at the time it was COVID, right? So we were and indies had their whole Bharat biotech, what was going on with that, and how they had locked in they were trying to lock in the government and what would have happened. Cool, all right.
Yeah.
What's the
Very
big push?
disappointed with that, by the way.
That's
Yeah,
life.
because
Things will happen.
that was what made me exit my position in
I am making
Indies.
me. Well, I haven't exited my position because I'm waiting for that patent.
Yeah.
That patent is just, yeah. I My
Keep
plan
keep
is
keep
fine.
waiting. Keep waiting.
Right.
You'll be fine.
I know I will. So, but going back to tropical, the big push on everybody's thought process and talking is EVs, electric
Yeah,
vehicles.
but that's not going to happen this year,
I
is
don't care really
it?
when I don't really care when it wants to happen. I'm just giving you
I
a
saw that, but
perspective.
I'm not impressed. I saw that, but I'm not impressed.
Again, I will remind you what I stated about my
Mm.
thought process of tropical. If every company now starts to bring in EVs, cool.
Mm-hmm.
EVs need batteries. Batteries need to come from somewhere, but then they need to be installed. Similar to how you can easily go and get, instead of buying expensive parts from the dealer, you basically can go to
Yeah,
Bert's
but
or your
Chike,
parts.
how much of that will he be doing to have a significant impact on revenues?
Well, you need to ask. You need what we need to ask
How
is how difficult
what
it
was
is
the
for them
price?
to
What
basically.
was the price that we saw for that? Somebody shared that EV on Twitter. What was that? 15 million?
Yes,
How
okay.
how how many of
So
those do you think going to sell?
you're missing the point. That's not what I'm talking about. I'm
Okay.
talking about the fact that companies like JetCon and so forth plan to do EVs, right? So if every dealer now brings in a hybrid car that has a battery that needs to be changed or serviced, I'm looking on Tropical from the standpoint of being a service provider for maintenance of all the
I
EVs in
get
the
that.
island.
I get that, but how many of them can you really actually sell?
They're not selling anything. They're basically going to
No,
be
no, okay,
replacing the
okay,
batteries.
okay. What I mean is, so I get that part, but how many of them will they be able to service? Because the service is gonna come after they've been sold, right?
We don't know, but they have a big lot down there by the wharf, close to the wharf. they can convert some of those bays into EV service bay. I mean, again, sky's the limit for them because they're a battery company. That's what they produce.
That
So
that to me sounds like the same thing that led. We saw that 40% rise in Wigton the other day because of.
Flash
I
Motors.
mean, Imran, they're selling a few. How much is a few, right? Because let's say they sold 10. Remember, for a dealership, 10 vehicles, if it's EV, sure, it's 150 million if it is a $15 million vehicle. But then how much revenue from servicing would Tropical get in this case? Or those
We
usually when a vehicle is new, there's some warranty. Like there's a period for which you don't really get any significant revenue
so
from it. Oh,
let's ask the
mhm.
question. I'm also looking on this fact as well too. This is a battery company. So they're already dealing with batteries and servicing of batteries. They already have that expertise. Cool, cool.
Mhm.
If they pull off partnerships with each of these dealerships, that when the particular EVs or hybrids, right, because those are batteries as well, need to come in for servicing, etc., it is done. Even if they're not selling it, if even if they're not using a tropical type battery and it needs to be put in, right? Two things happen with the dealership. Either the dealership is going to go and train their people to be able to service these cars themselves,
Mhm.
or some partnership happens, or some person does their own thing, right? They basically do their thing. That's my expectation about tropical. I see that's where I see tropical now really pushing a niche market, because they know how to deal and service with batteries. It's just the next progressive step for me, because Jamaicans have a whole bunch of cars and everybody complaining about gas prices, and your next positive step is then to either buy a hybrid or buy a full EV, and that EV
Okay.
has to
So,
service.
all right. So, Chike, let's say that is correct. Like, let's say everything that you just said happens. What would that translate in for them in terms of revenues to what they're
That I
doing
don't
now?
know. That I don't know. I don't know how
Because
much they would even price the service at.
to me, it's realistic for those things to come. So we're talking about it now. It doesn't mean that you're going to see an impact in XQ, right? So to me,
No, no, no. By the way, this is not. No, this is not next quarter. By the way, this
no,
is
man, no, man, I
literally
get you,
this is
I get
your
you, I get you.
long
I'm
term.
just saying, I'm just saying that. Can we look at the? Let me bring up the. Let's look at them for a minute. And guys, I hope you don't think that. So what we're doing is this is the very same way that Cheeky and I talk about companies all the time.
Oh,
So
look at that.
yeah,
Anyway,
but so even so the reason why I ask you to bring it up is that to me, right now, I've always said that you want to buy companies before all the noise starts to happen, right?
maybe I should have stayed silent then.
No man, no man. So to me, they've seen some growth already, right? Because if you that's the last 3 months alone, so they've seen some growth. My question is what we're expecting already priced in, or where they are now is still fair value, and there is more to come. You understand? So that's why I ask you to bring it up, because for me, it I haven't looked at them, so I don't know. But for
That's,
everything that you're stating, can we see their most recent financials? Right, so the
um,
stock price is already up 100% since the start of the year. Right, so it's up 100% already on when was that released on news, right? Or that was or did they have a report come out?
this was on the 20. This
Okay,
so
okay,
this
okay,
report.
perfect. All right, yeah, man. So let's
So,
let's look at that. Let's look at
so this is first quarter, and everything is up. But anyway, I don't like quarters. What I want to see is, let's see if we can glean anything. Oh,
yeah.
well, and here we go. Also, In Q1 of financial year 2022, we established a partnership with one of North America's largest lithium-ion battery recyclers, positioning Tropical Battery as the go-to end-of-life solution for lithium-ion batteries from electric vehicles. Okay. I didn't know this before I said that, by the way. You hear?
But somebody had mentioned it, in the group,
I
and
didn't
it's
even see that. I didn't see it. I didn't know this. So here is me connecting the dots. That's in bold right there.
oh
Let's
boy.
let's
All
bring
right.
it up. So let's see where this goes. Since this has been now established, let's see what they do. Oh, and people should not ignore it. You just don't go and throw up a business like that without having certain, especially with batteries. You have to have certain certifications because it's corrosive, polluting material. Let us establish that. What did the people them say? Okay, a consultant was retained to prepare the company to meet whatever this particular standard is, which also requires Tropical Battery to meet. This, by the way, is huge because I know that ISO standards, at least I've seen the
Yeah,
ISO
man,
standards.
that's a good sign. It means they're seeing opportunities for it long term, and they've invested in that. So yeah.
Right. They go on to say, this certification will provide assurance to Tropical Battery's upstream and downstream partners that the company is handling lithium batteries in an environmentally responsible manner and improve the company's growth prospects in the recycling segment. So there we have what is called what? ESG,
Yeah,
environmental, social.
because Jamaican investors care about that, right?
Oh, okay. All right. Good. Good. So I think I've said my point, and I can move forward. And I don't even look on financials because I don't care about
No,
financials.
no, no, no. Let's look at them, please. Let's look at them,
No, we will
please.
look at them, and that funnily coming from me, you realize who is the financial. But this is the strong qualitative future growth that I'm
Mhm.
looking at.
Yeah, man, that's definitely a good sign. It's definitely a good sign.
Right. So on the back of the financials, we had, let's see now, their statement. Well, let's take this little ribbon up here. You have revenue up 48%,
Mm-hmm.
expenses up marginally by 10%. Their earnings before their interest, taxation, depreciation, and amortization is up 137%. Their net income after tax is 197. Now, here's the problem I have with this. This is fiscal quarter 2022 versus 2021.
Mm-hmm.
Right. So there are COVID period and so forth. But okay, I'm going to leave that alone. Wait, actually, no, I'm not going to leave that alone. Do we have their 20? Oh, there we go. We don't really have anything for their 2019. But I mean, okay, so we have 2019. This was
Not unless you look at maybe the annual report. Maybe you can find it there.
if it was even there. I don't think there was one for 2019. They weren't out at that point in time, were they?
I don't remember.
They weren't. They weren't. They weren't. They weren't. But even still, we still have a figure. We have a figure for Q4 of 26 million
Mm-hmm.
and 26 million, call this 27 million. And now we have Q4 in 2021, 29 million, right? We are looking at the report for 2022, right? And their financials say, ooh, I hate when they do stuff like this. But anyway, let's take a look and see how I can get it. There's 3 months.
It's completely blurry for me.
Yeah, I'm trying to make it better, but it's not.
Yeah.
Blame somebody throwing it. But they've doubled their EPS in the comparative period. It's from 2 cents to 4 cents, right? And this is only their and this is what? This is only their Q1. They're just 3 cents off the entire financial year, which was
Mm-hmm.
which was 7 cents, right?
Okay.
So this is now looking at the company in a microscopic quarterly, which I don't like doing, but cool, I'll take it. They're already showing improvement in doing what they're supposed to do. Let's see cash flow. Cash flow. Cash flow dipped. Sorry guys, but yeah, the cash flow the period before versus what they are.
No, what caused the dip? See if you can find that out. What caused it? Was it investment in? It's
Let's
not. It's
see.
not investing activities. Where did it come from?
Clearly, it's not from finance, because that is nothing. Uh,
Interest paid.
ugh,
Um, Accounts receivable due to related companies. Yeah,
something
those
went wrong.
are it's on the operating side
Yes,
mostly.
definitely on the operations. Definitely on the operations that it came out on, because here they have um top part here. So this is profit and everything from depreciation and so forth. That was 84 million versus the same period the year before, which was 38. And
Hmm.
then thereafter, when we get to the working capital section now, there was
I would
oh,
love for you to do your calculations on them and get back to
it's
me.
the payables. It's the
Mhm.
payables.
Yeah, yeah, man.
That's gone out of whack. It's a solid increase.
Massive.
And
Yeah.
also, yeah, yeah, okay, right. The accounts receivables, at least they got some money. It's not, but yeah, that payables, yeah, okay. So, I mean,
Could
but they're
be
still nice to
it,
but they're still
it
nice to
could be paid
capitalize.
now and done with, right? It could be paid now and done with. So
Yeah, true.
you'd have to look at the balance sheet to see what's there going forward, see
That
if there are any long term
that was
things to
before.
pay.
God, this is a horrible,
It's
horrible
hard to
statement.
read. Hard to read.
But well, the balance sheet current assets are way more positive. Well, exponentially better, not
Hmm.
exponentially, but solidly 600 odd million dollars more than the same period, and that's
Hmm.
simply because, well, inventories grew,
Yeah.
accounts receivables.
Inve- Having more inventory is a good thing. Hopefully, it's not stuff that would expire. I figure it has a reasonable shelf life.
Now we
So
have to go
having
dig down
inventory
to
is good.
see how much. Yeah,
Mm.
yeah,
Yeah.
that's what we have to see. Right. Cash, okay. So the liabilities now, the liabilities, the liabilities have gone up
Accounts
100%.
payable. Oh,
Yeah.
that's crazy. So is it the reason why the accounts payable is up so much is because of um
Let's see Note 7. Note 7 is
yeah,
what they say it is. So here's,
I'd love to find out why.
well, their trades payable, trades. So it's actually them.
You think they maybe took short term credit because of the pandemic? They maybe wouldn't have enough cash flow to repay things.
Let's see. Here's a short-term loan. Um,
Short
it
term
doesn't
loan
say.
from NCB 7.5%.
Yeah, but this, I don't think this is going to.
That would be on the balance sheet, wouldn't it? On the
Yeah,
SAM.
in
Hmm.
a, in the current, it
Let me
would be in
see
the
if
current
David is
assets.
back, by the way. Okay, I
It's
haven't
in the
seen
current
David.
assets. It's got to be in the current. It's in the current liabilities. Here's the loan. So that's not it. This is the loan right here, 100
Hmm.
million.
Okay,
We need to know what number 7 was, and they didn't explain it well.
yeah.
They really
So
didn't.
I
They just
mean,
said
yeah, I'd want to find out what that is. I mean, wait, go back to it for me. Accounts payable. That means it would have to be paid within the year. So how much did they pay on the cash flow again? How much out
um,
of that did they pay?
you mean how much it increased by? Because it actually increased.
No, no, no. So if I understand it correctly, when it shows on the cash flow statement as being paid out,
It,
and we see the balance on the balance sheet on the short-term liabilities, if it's 500 on the balance sheet and they pay 264, that means you still have 236 left. Is that the way to interpret it?
no, it's 236. Yeah, they do a little bit less.
236 out of so the balance is still
236.
there to be paid for the remainder of the year because it's short-term liabilities, right?
236, 616.
Mhm.
236, 616. And then,
I
wait
mean,
a
so
second.
again, I know persons there are quite a few persons I've seen with strong sentiment on tropical, and to me, it's so. There's one thing I noticed, and I'll say this openly because you guys know me. There are times when a company, I say two kind of conversations out there. There are persons who focus on the stock price for a company, a company's stock price can do really well, 100, 200, 300%. The company's performance, as in revenues or profits, doesn't actually justify that increase. And then somebody said, hey, I bought into this company, I got my profit, I got 300%, so it was a good buy. No,
That doesn't mean anything. No, it wasn't.
I'm not knocking anybody from saying that, but for me, if I'm looking at the performance of a company and it doesn't present me with a good opportunity to buy, personally, I'm not going to buy if it is that I don't think there's grounds for solid performance. Now, as we know, sentiment is highly valued in this market. So a company, we looked at a company that they recently said do not participate. The company went as high as most 50 to 70% higher than its IPO. So I mean, it's clear that a company can perform outside of fundamentals, because when we go through the numbers, we're going through fundamentals. We're not really factoring in the qualitative side. So I just wanted to say that, because I don't want, if it is that Tropical does really well, so maybe next time we're doing this review, it's at a much higher price. You hear, well, Jermaine, you got that wrong. Because I know there are some persons like that, right? We're just having the discussion around the company, and we want to be able to make a sound investment. So for Chike, it's on his watch list for the reasons he's stating. For me personally, it wouldn't be because of the things that I've stated. And that's how I want you guys to take what we're saying. So, I mean, I just know that some persons can kind of, this industry can be a lot about who's right and who's wrong. So I just wanted to state that.
Yeah. Yeah, I don't like playing that game either.
Yeah, I mean, it's one of those things, right? So I just thought it would make sense to say it here, because I mean, we're looking at it impromptu, is not a full stock review. We're just kind of going through it. All right. All right. So what else? You have anything else you want to look at for them? Because as I said, I would love, so the stock review for Tropical is actually April 20th. So we're going to do a full stock review and analysis on this company in just 3 weeks. So just bear that in mind.
Okay.
So
There you
maybe
go.
I'll change my mind about them by then.
No, you won't. It's not gonna change anything. I just know what I'm looking at. My own is material. My own is qualitative. My own is that long term, that it has potential. It has because I genuinely feel this is a niche market.
Yeah.
In terms of you see, unlike, and I don't fix cars, so I don't know, but I mean, I've been very down into the repairs. The way how a person can just set up a shop and just do a repair on a car in a yard or something like that, you
Mhm.
don't do that with batteries. You just don't, like. But again, that comes down to regulators and actually, you know, making sure that regulations are followed. The thing I'm looking at is clearly what is outlined about Tropical with this particular market is the fact that they are technically supposed to be, until I hear something else different, it would appear to me that they are setting themselves up to be ahead of the pack, right? So by the time everybody fully steps it, because again, let's establish as well too, it's not cheap to do this, right?
Yeah.
Not cheap to it's been said already in the group. For those who understand it, they're saying that, the batteries don't need to change. The truth is, yes, the batteries don't need to change often, but you're forgetting one thing: we don't have that many charging stations like that. So if everybody's buying an EV, unless it's a hybrid, right? If you buy a pure EV, you better be certain that it's going to run the distance. And just because a car says it's going to give you 150 miles, that means that if you can get 150 miles if you don't press gas, if you don't burn the AC, if you don't do anything that is a drain on the battery. I've watched enough car and drive. Well, cars. I'm an enthusiast for cars. So, and EVs, I'm very, very right now with the whole gas thing. I am very much interested in an EV. So I've been looking them up. Right?
There's another part that we didn't mention as well, Jamaicans and their ability to adapt to change.
Right.
which is also a factor. We speak about EVs. How soon would we actually adopt those type of vehicles here? Will you be buying one?
Oh yes, for sure.
How
If
soon
I
though?
my next car, which we were looking at, maybe my by next year. Yeah, I'm pretty. It's either
Okay.
going to be a hybrid or EV. It's flat out. I'm dead serious. Hybrid or
Ah,
Smart
EV.
move, smart move, my G. Like, Virgin, gas prices are just insane right now. Like, $240 for gas in Kingston. They used to be Ochi prices.
Yeah,
yeah.
yeah.
Okay. So David, you missed quite a bit, but
Uh,
we're talking
Sorry
about
about
tropical.
that. I was driving and my mom was talking and I couldn't bother to just unmute myself.
No, man, that's good, man.
But
That's
yeah,
good. So,
but yeah, what I was gonna say was you talked about CPG already.
no, not yet, not yet. You mean the stock that has fallen
Yeah, that's
from
your pick, David. We never even spoke about CPJ.
No,
So that's
CPG
definitely
is
your pick.
interesting now because CPG actually had to become efficient. I still like about CPG right now.
True, good
But
point.
they did more than 1/4 of net profit, which actually included full tax and everything else, and they still made the entire financial year when tourism was really going straight. Like that's amazing.
bring up
Flat.
CPJ
So
Cheeky. Let me see them.
the price is flat,
'Cause I
which is
just
not a bad
remember
thing.
when CPJ was like $23 and then it went all the way down to 10 and Romain was in the group laughing at everybody and then and then I think let's see.
Well, I got that chart up. I got that chart up, and it was 22 in February. Then it
Hmm.
plummeted all the way back to 13. It's now at 14, 19. I mean,
Yeah.
again though, the price based on where it's coming from, the trajectory is still up. Yes, it has broken its all-time high, but it's still up. So,
Okay.
but I have no
Oh,
skin in the game, CPJ. So
well, I was gonna say was that I have to feed my CPG exposure at the moment. I took profit, and then the C. I like the thing is, COVID actually forced companies to become more efficient because for you to actually do more 1/4, you know what I said, 1/4, and then and any of your last 10 years, when tourism
yo,
was at full guns, tells me that you are going to be much better
in truth,
in an open economy, or if you want to travel.
I
And
mean,
even though
come on.
Russia is going to,
Well, not okay.
No, no,
Okay.
David is right. David is right, and that's because it's in front of your face right here. This is the
Yeah, man.
this
no,
Yeah,
is
like
man.
literally, Jermaine, be honest,
you.
Jermaine, if we don't 20%
Uh,
increase no matter,
as,
right?
as I was intentionally going to be difficult, but you're right. It's right there. Kind of that. Fair
So,
enough.
man,
No,
this
no. The thing is
22
that
is amazing.
no, look, think about it, Jermaine. We're 20% below pre-COVID numbers for tourism, right?
Hmm.
They did a profit in September, but they only did that twice before their entire 20 plus year history. It's more a sales record, and the rest of them less volume. And the thing
Okay.
is that they plan to get some more capital to expand. So it should be ready to see. And then the Mayberries increase their second 20% again. Well, MJE. So that tells you enough already. So oh
Well,
yeah, for
that
those who are not speaking about MJE's
that may
Mayberry
tell
Jamaica
me
is
something
limited.
else than what you think it will tell me. But okay. Okay, fair enough, fair enough. Okay, so CPJ is still one of your stock.
Honest. I have to
You
agree with
mentioned any
him
folk
still, just
already?
because of this. No, I didn't touch. I said I'm not touching any IPO stock, and I broke that promise only for tropical, and I'm not breaking it again. Only because what I believe in tropical, and that's it.
Yeah, but I don't think we should talk about any of the IPO stocks that came
Because
out
it's
this year.
I because I believe
Yeah,
it's an unfair
yeah,
But
usage,
she,
yeah,
just because they are
yeah.
going to
that
be
is true.
riding
That
on
is
a
true.
high for a good while.
I agree. I agree. So let's not touch like it hasn't even been 6 months. All of them within 3 months. The last three IPOs within the last 3 months. Okay,
But
fair
boy,
enough. So
JFE has been a funny trading stock because we went to $1.09, $1.06 in the last 4 days. The max 130 today. Like,
well, yeah, it halted up today. So persons are happy about that.
but the only thing that was surprising to me, he spoke about Sajiko approving the JMB already.
Wait,
No,
say that again.
No, I was talking about, you're speaking about JMB are proven as yet, because I was surprised today when somebody actually broke through all of those walls of proven USD and set the stock to like 0.28 US. I was like, huh? What the hell is going on right here?
Mm. Now we didn't touch on those either, you know. So what we can do, we have. Let me actually pause here, get through some of these comments. See if guys, if you have questions, post them now because
I'm
we're gonna
looking through
wrap.
the comments right now as well. So,
Yeah, we're gonna wrap up in less than 30 minutes. All right, so we're gone. We're gone 2 hours. So let's kind of see what's there. All right,
all
so
right. The dealers can't discussion about the whole chemical battery and electric vehicles. And Chike
mm,
was right. Adapting is one thing, and at the same time, the cost, because EVs are not cheap. You can get a
mm,
used old car right now for $1 million, $2 million easily. Decent car, and cheapest EV in the market right now in Jamaica at least is like around $8 million.
mhm. So I mean, what I was thinking about, you know, is because Chike, we were talking about buying cars in the group today. So we're talking about it in the WhatsApp group, and what we're talking about is the ability for persons to acquire a new vehicle. So the type of persons to me who would be interested in the EV, maybe those persons would have to essentially sell their existing car and then go to it. But if we're talking about new car buys, so to me, I'd love to see what those statistics are. But to me, it's not
Uh,
something.
so, so for Jamaica, we have about
Yeah,
probably 100 at max EVs in the country, compared to Barbados, which actually has about 350 plus. And Barbados is barely the size of some more parishes, so that tells you, they actually have the highest EV per capita concentration in the entire Caribbean.
yeah. I mean,
And
so Imran is saying loans will be there. Yes, I'm sure loans will be there. And the problem is at some point, well, I mean, let's see, because I feel like
uh, Jermaine,
I'm
can
yeah,
you hear that comment by Imran about the whole shipping cost? Can you highlight it?
yeah, man.
So what I was gonna say was that, to be honest, Imran, our comment up to the right now at this point is just near sure, because there's even an article on Sunday with Metro Siaga speaking about the fact that they're benefiting from that situation right now, whereby the East is so expensive. So instead of everybody going to the East, they're just given their sure companies. So Jamaica is right here, Florida is right there, Texas is right there. So that's really the reality right now. Like, the closer your quote unquote expensive competitors, your expensive suppliers are, the better. Because the reality is, cheap women are basically being so dirt cheap, $2 per container. Things reach quickly from China and everything else. But now we have the Russia war, or shipping containers being so expensive. The only companies can actually reduce the cut down shipping costs is to actually source things closer. Where is the problem? You, as some companies like a Separad or a Honeybun or whatever, the products they use have to be a particular quality, then they can actually say, all right, we're going to use a Cuban guy. It's really coming down to actually the quality and the supply. And the thing is that all companies or category suppliers that they might engage can meet both of those things. For example, KFC is the Jamaica broiler chicken, right? KFC is never empty. Pre-COVID, COVID, closure that down, people say KFC. That's a perfect example. And Jamaica broilers can actually supply them. And the one time Jamaica broilers had a little system issue, they would say, yo, chicken shortage.
I remember that. I remember that
But
very well.
that's just my point. That's just my point, that there are few companies actually, there are CB chickens at the same time, but the thing is quality and quantity. Not, you have to remember that companies of a particular scale have very few suppliers they can look to, unless it's in technology or in, probably, for example, human capital, like the BPO sector. Otherwise, companies have to continue to absorb shipping costs or pass on to consumers little by little, but that's just the reality, because, as I said, they are particular. So fertilizer and other compounds from China is probably the cheapest cost, even with additional shipping costs. And as I said, the quantity and quality. And even recently, I ordered two things from China back on March 9, and it reached Miami. I'm thinking about is a delayed flight. And the thing is, companies are concerned with two things: inventory, so they can actually meet the supply, or sorry, meet the demand of their customers, and at the same time, the cost. So it's a really difficult balance.
Yeah. All right. So I think we covered that. I'm trying to scroll as far back as I can to get some of these comments. Um, so Corey is saying if Tropical should start an EV mechanic training, that would be a win. Yeah, that definitely be a good thing. Again, with those things, I always think what's going to be the translation to revenue, and what's going to be the investment in terms of cost for them. So that's what I would think of right there. Let me see what
That's
other
what I
comments.
that's along the exact lines I'm looking at. That
Yeah,
they can create a niche market for
So,
themselves.
so for me to be honest, tropical battery is in the right thing and they're going right now. So you have tropical mobility, focused on EVs, tropical finance, focused on supplying the cost for the EVs, and there's a third subsidiary. I can't remember it immediately. Enervate, which is the joint venture with CSC, focused on energy savings. So the thing is, all the persons can be like, oh, a company should get to this space or whatever. It has come down to is it close to your core business or are you diverting too much? Because remember, Tropical focus, energy. The Wixon focus, but it's energy.
yeah. Somebody else saying Tropical and CAC also have a collab. Haven't spoken or thought about CAC in a long time. So that's one. Imran is saying I should ask Stewart's about the selling of. I think we're talking about EVs there. Tawanda is saying how much of Trans Jamaica earnings goes to debt repayment. You have that figure, Chike, or you remember?
No, I don't.
All right, take
David's
it
supposed to
from.
know that off the top of his head.
Yeah, man. David knows everything off the top of his head. David, you know how trans are in relation to their debt repayment, Trans Jamaica.
They're still paying on schedule and have their necessary reserve accounts
Okay,
because if there was an
that's
issue in Jamaica, we'd have seen it reflected in international markets.
yeah, yeah.
Where would I
All
find
right.
that? Quarterlies?
No,
So Devon
no,
is
no.
saying,
Remember, Jamaica's bond is listed on the Singapore Stock Exchange. Their preference share is
Mhm.
listed on the Jamaica Stock Exchange. And
Okay.
you have companies like Moody's or you have JP Morgan and so on actually analyze Trans Jamaica's debt repayments. So
yeah.
Huh.
It's
That's
it's
good to
it's
know.
important for them to maintain it so that you see that same 23% that you're looking out for. Yeah, let's see. So Devon is saying the whole Jamaica uses batteries and they have a big portion of the market and the profits doesn't, well, I can't read that part. EV batteries doesn't go as bad as often as the LED batteries they sell currently. Um, EVs require low maintenance as well. I don't know how to pronounce that name, GWNG. And the White Walker is saying loans are getting more expensive now. That is the part that I wanted to say earlier that I didn't say because I didn't want persons to think I'm being too negative on Tropical. But one of the things
you're
we're
not being
talking about
negative.
today in our WhatsApp
Opportunity for
group,
them. It's an opportunity for them because they can undercut the banks in that's a market.
it is an opportunity, but it's also a risk. If are you saying if they do the loans directly?
That's I'm saying that remember they haven't detailed how they're going to actually operate tropical finance because it can always be the case like a Stingness where they lend
Ah,
directly
okay,
to
okay. I
particular
get
entities.
you. I
And the
get
thing
you.
is, if they lend to corporates only for EVs, then it becomes more attractive because the risk actually goes down even further. Especially if they lend to companies like this one Stingness lends to, like for example, Seprod and those other rated companies or number company, for example.
Yeah. Okay. All right. So guys, I'm gonna ask you again. We're almost at the finish line, but I'm gonna ask you to like the video again. Really, really important that you do. It helps us, especially if you're a regular here. If you're new, then I understand you may want to see what we're about before you like, but please like the video. It definitely helps us out. All right. So
David
let's
definitely helped me out because
say,
this is what I'm going to be referring to going forward. What?
yeah,
They actually
yeah.
have this?
Share that link in the group in the Telegram group for me.
Okay.
So, all right, guys, in the last 23 minutes, I want us to say,
Jeremy,
yeah,
I just looking back through the comments now, and I just saw someone ask about Knutsford Express or talk about the impact for them. Knutsford
yeah,
actually sees an opportunity for them though. I wrote this is an article I did a couple months back, probably about 2 months ago, where they said high gas price is actually a good thing because it actually forces the consumer, like everybody else who drives on the road, to say, should I drive my vehicle from Kingston to Montego Bay, pay the high gas cost, probably but it might cost my entire tank back and forth, or should I just pay also the experience to carry back and forth? But their quote unquote marginal cost related to the cost of gas is still very cheap. Because I think it's like what, $2,500 from here to Montego Bay, one way, $5,000 back. Everybody's gas tank is about 7,000, 10,000, $30,000 right now.
Like,
So
I've always found them. I've used them multiple. I've used them multiple times to go instead of driving to go down. It makes more sense
no, and that's just
easily.
it. So when persons are saying that, this is a risk for some companies, you have to remember it depends on their competitive advantage because think about it. Jamaica is not a USA, for example, where we have highways spread all over. We're still trying to connect the entire island via highways right now, but we've only connected the parts of the country, in this case, the North South Highway, down the middle. We're still going around the island. And if you had to travel through the whole roads of Jamaica, it is very expensive between maintenance and wear and tear. So the thing is, and just like Fesco, for example, the revenues are going to be insane when the results come out. And it's the result of Fesco, for example, quote unquote, spiking prices like crazy. They increases prices, they pass on to the consumer, it's recorded in the P&L, and that's just it.
okay, okay,
No, that's just it. Like, so if we're talking about gas prices and commodity increases, that has to be taken into context. So the example I gave earlier was that distribution companies are going to be facing some extremely high jump in cost to actually carry the operations because
I think we lost David.
yeah, man. I think it's temporary. So let's hold on a minute. I think small thing, but you're saying slow down to David.
Yeah, he talks
Hopefully,
fast.
yeah. You just kind of have to.
No,
No, admin. No, Arville. We didn't remove any comments. So if we missed it, I'll just ask you to post it again. So, what I was going to say is just any final thoughts in terms of outlook, things that you're looking for, maybe from a economic perspective, industries, etc.
you know me.
'Cause yeah,
I'm always looking long, zooming out. That's the most important thing every single time for me. So I advise every. Let me not say I advise. My viewpoint,
like what are you doing?
my viewpoint in where I look at my investing is what's impacting the country pretty much. So
Mhm.
you've got price increases, you've got gas increases, you've got increases in wheat and so forth, grain and so forth. Connect which companies basically that impacts. You've got the entertainment industry, clearly from the music in my background that you can hear, that has really come alive again. There's no
I
curfews.
honestly never missed those. I never missed
Neither have
those
I.
during
Neither
COVID.
have I.
Yeah.
But there's a free for all of everybody going back out and everything. Connect the dots there. So for the companies that were performing really well with that as well too, and I didn't mention those as well. Some of them you've already seen them run off on, and that's why I'm not mentioning them, you know. Um, but yeah, just look on what's working right now because what I find or what I believe is that a lot of things for Jamaica, specifically about how the market is that it's cyclical. So right now, you have gas as the biggest thing because gas price is going up. Next
Yeah.
biggest thing is going to be entertainment, clearly because entertainment is coming back alive and everybody has been locked down for 2 years and they're hungry to go out, so they're gonna splurge, right?
Yes.
Next,
So entertainment, anything related to entertainment, tourism, all of those
travel,
sectors are gonna
travel, that
be.
stuff. Those are the sectors that you would be looking at. It's not a. I won't say it's a hard and fast thing because again, what people seem to be forgetting is COVID is very much still out there. We can very much have a new variant.
Yeah.
And even though the powers that be have said that they have no intention of putting us back under any kind of restrictions,
It
if
depends on how bad things
it
get.
really, yeah, it really does depend on how badly things get.
Yeah.
So you have to take you. It's still like you're playing on a dartboard and you're trying to you know
Because
traverse the ball.
I think I saw something about China having to go back into lockdown because of some sort of breakout.
They're doing a crazy policy though, and you can't use them. China has a COVID zero policy, which
Yeah.
if they literally have one, and they actually when I look at it, when I read that and I started to look at it properly, I realized that they're the root cause of this mess because one
I was
person
gonna
got
say
sick.
that too.
One person got sick in that Shenzhen area for the shipping area at the dock, and they locked the whole dock down. Like everybody gets locked down just because one person got sick, and that's simply because they have a COVID zero policy. As long as they continue to have a COVID zero policy, they will continue to lock down. They have not reached a point where they are comfortable that things can get out or they can allow it to go out, right?
Yeah.
Unlike the rest of us, unlike what the government here has decided to take, is a stance that listen, we just have to live with COVID. Their solution to it is get vaccinated and get back to life, and that clearly is the general uptake solution because we have seen now a lot of companies are telling their
Yeah.
workers to get
Yeah.
back to work
And
physically.
and that to me, on that same note, what I look for in situations like that, we're gonna see great impact for companies like Wisynco, for companies like all of those that were nothing else coming to mind right now, but all those companies that were greatly impacted by lockdowns
Yes.
in the next quarter or two, we're gonna see dramatic increase in numbers because if you think about it now, with schools back, to me, Wisynco is extremely attractive in terms of what their revenues would look like for this quarter
Hmm.
and the next because we're still in Q1. So
Yeah.
so Wisynco is one of those that, again, if you think about where it was before COVID, it was doing really well. I think it was trending up almost to $28, $29 thereabout. So I mean that's one of those companies. So you really want to look at what's happening in the environment and see how that will impact the companies because those things will impact how profitable they are. As David said, it means there are companies that may be able to surprise you. If there are companies that have been doing poorly throughout the last 2 years, and you see now there's an opportunity to look at them seriously, then I think you have a good chance to do that. No, you want to look at companies that nobody's talking about. It may not be the most attractive thing to do because you may buy it and you don't see it moving, or you're like, what's happening to this one? What's happening to this one? And to me, it's actually a good thing if we don't even talk about it here. If we didn't mention it here tonight and you like it, do your research, take your position. Because on my final, the only pick that I had in the first one was Fosrich. And can we bring up Fosrich quickly? I just wanted to show that.
Oh, faster stands a good gain as well too because again, electrification.
So I said to our Telegram group that I looked at Fosrich because I was looking at companies in construction and all the related companies. Right. So Fosrich came on my radar from that. When we did the first stocks to watch this year, Fosrich was $10. It went as high as almost $18 this year. Right. That's almost 80% gain. And that's just 3 months. right? So I mean, you want to look at those companies that nobody, because I think after we did that stocks to watch in January, then I started to see the brokers release their recommendations, and Fosterich was actually popping up on a lot of them. So it made me feel like, okay, I made a good decision based on that. But I didn't make the decision when the reports came out. I made it. I made it before. So you want to do, those are the kind of investments that you want to make, because the difference between January 4th and the end of January, it was $15. So it was up almost 50%. Now, if you bought at $15 short term, you got at least 33%. But the difference between 3 weeks of research is almost 50%. And that's just something that I want you guys to think about, because our channel is here to help you to get the education you need to invest better. We don't want you to become reliant on our watch list. We want you to have a method to research for yourself, to go through and see the kind of things that we're talking about and looking at. It's the same things that you would talk about, but you just want to see how it would translate to the company's bottom line, because everything we're talking about ultimately boils down to that: how profitable they are, how well they manage costs, what are the factors that stop them or enable them to do more business, etc. It's simple stuff. It's not really technical. When a company has strong sentiment, like we've seen for some of the companies recently, when sentiment is strong, then when sentiment is strong on a solid fundamental foundation, it's limitless, that growth. If it's sentiment only, it will die out at some point. And then, as Chike would say, reality will kick in, and then everybody will probably head for the exits.
Gravity.
But
As a matter of fact, yeah.
yeah,
I'm extremely cautious when sentiment is high at any point. If I haven't made my entry into a company
no,
before sentiment is found,
but here's the thing: sentiment is not bad, right? And I, you know me, that I look at qualitative a great deal, because usually sometimes there's sentiment because it's something worth looking at. Because I remember when Fesco just passed $3 and everybody was like 400% from IPO. That's ridiculous. You know, it went, I think, to 315, and then somebody wrote an article and it went down to $2. And I remember that's a time for me where I said, this is a great opportunity to increase my position. So I look at those things where you look for the opportunities that come, and then now 6 months, 9 months later, it went as high as $8.49. So for those who jump ship when it was heading down to $2, they would be up 400% if they bought at $2. So I mean, it's just, you can't really. It's important that you have a
targets.
few trusted sources of information. You have your process down, you have your strategy down. Once you've developed that strategy and you have it documented, block out everything else and stick to that. Because one of the things that we encourage our group to do is to, it's not that you need to invest with a long-term horizon, but think about how long you'll be investing. And so there are some persons I see being in a rush to take profits when there are opportunities to get great again, if it is that you just hold on a little bit longer. So
What was it? What was that statement? You sell your winners too early and hold on to your losers too long.
pretty much, right? So I mean, and it's not for us to tell you what to do, because we aren't advisors. We just want to share with you and give you a perspective that you can think about for you to make your own decisions, right? But yeah, that was just me wanting to help you guys just kind of see how Chika and I think about things. One of the things I love about what Chike and I will do, we'll talk about something now and see it play out 3 months from now, 6 months from now. And the conversation that we have on the stocks to watch, just like we had it for the last 2 hours, it's the very same way that we talk about companies. And it's what we've been doing for the past 4+ years. And it's been a process that has worked for us. We start with the numbers. We see what we're looking at. We talk about the factors impacting the company. We find all the information we can find, and we reason it out. How will this impact it? Is this good or bad? Is that something that's promising? Well, it's promising, but how much of an impact will that have? And if it is that we can kind of convince each other, then we'll say, okay, I'll seriously take a look at it and see. And then we may say, all right, let's find a good opportunity. Maybe at the point that we talk about it, it's not a good time because we said maybe it's selling at a premium now that it doesn't make sense. Or we say, well, let's watch it for a quarter or two because we're never in a rush. Right. And right, yeah. You have anything to add to that, GK? Because as I said, that's kind of what we've been doing for the past 4 years, and it's been working well for us. You're muted, by the way.
Yeah, my common refrain: do your homework.
Yeah.
Simple. Whatever you want to invest in, do your homework. Um, the unfortunate thing about invest actually is fortunate still. Is simply this: you can look at what you want all the while, and you can do all of these. You can do your analysis and stuff. But sometimes, or maybe a lot of times, the only way you can truly find out what or actually learn is by
Mm-hmm.
actually buying something. And of course, you don't buy something with everything that you have. You
Yeah.
basically just put something that you're willing to part with, basically. You're not buying it because of gains, you're not buying it because of anything else other than you're seeking to learn the process, right?
Yeah.
That's how investing starts, right? As you learn your process, you then learn about your profile. You learn about what kind of risk tolerance you might have. So you buy something, you might be looking at it every single day. There's certain investors that don't care about that just because they know how they've positioned themselves, so they don't need to.
Yeah.
But again, we have found that it's not until you actually get your feet wet, you put your feet in the water to test the temperature of it, that you can truly have an appreciation of not just seeing numbers and saying, okay, well, I've been playing around. So I should say this: I guess even if you don't want to actually expose your own money, they have many different apps and different pages out there that can allow you to basically build, play portfolios
Yeah.
and
One
and
one one of the things that I said to somebody is if you want to test if your strategy or your theory works, and you think about the company, um, go back into the past, look at the last 2 quarters and see if the things that you thought would impact it would work. I mean, we don't really have platforms that allow you to backtest, but you can do a manual backtesting and see how that would work, right?
And I want to address Laurie's statement just now. No, Laurie, you do not need a high amount of money to start investing in anything. The beauty
Start
about
with what you
investing
have.
is
Start with what
starting
you
with
have.
what you have, and if you do it correctly, you compound on top of what you have, right?
Yeah. David,
Um,
yeah, all right, man. You seem tired.
No,
so it
blame
starts
the
with
signal. I finally got home, but blame the
$5
signal. No, but
and
what I was gonna say was that, yeah. So earlier you were speaking about, practicing and so
looks
forth. And I kind of appreciating more and more good news and bad news. So, for example, mail pack. So based on what I understood, especially with the slowdown in traffic. And when I speak about traffic, I'm talking about demand for goods from overseas. It was slowing down. So when meal pack results came out and the market dragged the price down below $3, that didn't shock me. What was a quote unquote surprise to me was the significant or quick rebound back to around $3.80. That was what caught me off guard. I'm not saying that I was quote unquote not expecting it. It's just when it occurred. Just like how I said Fesco hit $5, sorry, $6 in a year, and within the first 2 months, well, first 2 months and a day, it hit $6.
I'll,
So you
I'll,
know,
I'll, I'll reserve my thoughts on that for our first in-person meeting as to what drives those things. You know how those things go.
I know, but at the same time, you still can't ignore it because really and truly, like I said, I did not expect that we were so quickly, but at the same time, when my sell order in place, and I've considered using profit as well. So, it's just about understanding for the micro cycles what's going on for the
Yeah,
company because somebody made some money on the stock and some persons winning from IPO are, are quite happy.
yeah,
And
yeah.
that
And
9%
I
dividend
mean,
yield.
10 million units of mail pack traded on Friday. But the same thing that I said on Friday, and the reason why I did the post on the dividend capture method is that I believe they benefited from the momentum of persons seeking dividends. Because if you notice, 380 on Friday, I think this week is down to 320. So
But that's on the
clearly,
record date. That's on the record date. That's on the X date.
exactly. But I think the persons who benefited knew how it works, but they were counting on the fact that those who don't know about it and how that would work. If you understand what I mean, because some
Yeah,
persons
I
see
get
the
what you mean.
and think the date that's the date you buy. So the persons who sold at 380 would have made the profit. The persons who bought now
You have got the
are
dividend too
exactly.
because somebody actually asked me about meal pack and about the dividend. I was like, no. Somebody asked me about that meal pack, but my dividend is being paid next week. They can buy it today and get the dividend next week. And I was like, no. So I put in my old articles and I was like, just go to the first couple lines right there with the whole X date, record date, payment date, and you should be fine. And
Yep. And we have a full video on dividend investing on our channel,
That's true.
right? Okay.
I'm sorry that Devon had to learn. He said he
No, but it's a
learned
good
Oh,
the
thing.
you're talking about
It's a good thing that you
hard lesson
learned.
of
Good thing that you
patience.
learned.
We did the indies test. We did the indies
Yeah.
test when they were asking about does indies never go below $3? And I'm like, and as I said, we're not talking. But I decided I had no reason to buy more units, but I just wanted to show, given the right time, if you have patience, you can get the particular company you want at a particular price. And what did Indies do? Indies went all the way down to $2.80, right?
Yeah.
So I mean, hey, patience is the name of the game for me personally. Patience is the name of the game for what I want to invest in and how I invest, right?
Yeah.
As German always says, never chase price. Matter of
I
fact,
was actually gonna point
that
out a
is
while ago,
supposed to be
cheeky.
number 101. Every single time you see a price going up, you better. What are you saying, David? What are you going to point out?
Say that again, David.
I was gonna say that, you know, when somebody says cheeky talk them about patience today, I was like, that's funny. That reminds me of when somebody talks about, this one is like talk about school events, like or school tools you use when you're in school, like this one taught me patience, this one taught me pain, this one taught me something. So I'm like, yo, when somebody says teacher taught me patience today, I was like, yo, person
Yeah.
actually learn like no, 'cause the thing is, even earlier this even right now, right? I actually got a stock in Canada. Right? It's a REIT because for me it's about counterbalancing my portfolio. It's a risk with something that actually you know balances up the potential volatility in the market. Because if the stock actually goes well, if the market goes down and the stock is there as a counterweight, then margin calls are less likely to hit me. You
Yeah.
get what I'm saying? And other day I bought a good chunk of the stock around $14.40. and it's around $15.30 right now. So yeah, call it about 20% in less than 2 months. And this is a quote unquote dividend stock, or one of these safe stocks. And
Things just
the
happen.
reality,
Yeah. Well,
no,
I
the thing
mean,
is, with those markets are focused more on you know actual preserving value, because right now real estate is being tied to inflation. Because for example, even Keystone Properties, when they calculate their yearly increase in terms of rent increase, they don't use Jamaican inflation, they use US inflation. So the clients are charging US dollars for their rent, but they benefit based on the US inflation, not Jamaican inflation. So that little dynamic there kind of benefits capes and the clients in the same in a particular sense, because if they've been charging Jamaican dollars now for the rent, I mean, it's the Jamaican inflation as the benchmark for increasing rent. Boy, it's gonna be a rough time right now, but and
yeah.
that's something I have to point out. And that person needs to understand how currencies work, because, and this is why I say that, for example, Stanley Mass Unlimited, all they do is collect rental income, and 90% of it is from Alarica, right? They collect it
Oh,
in
yeah. I want to mention
USD,
them, but I
but
decided
pay
not to
but have
mention them.
JMD financials, all that means is that the dollar depreciates. If they're collecting the same amount of money in US dollar terms, it's going to be valued more in Jamaican dollar terms. And even
Yeah.
Spiritually, a similar story. Their financials are in JMD, but 90% of their sales are in exports. Similar to
In
Jamaican
US.
tea, 6% of their
Which
sales
means
are
there's
exports.
gonna be
So,
gain on. Yeah. Yeah. Yeah.
so like that's the
Yep.
kind of method you have to approach things with. So is that the case where like you have a C, that's it. I know, sorry, not CPJ. So that although express catering, made those transactions in states of countries in US dollars, they collect good amount of JMD as well. But the thing is that because all the Portugal passengers overseas are going to pay in US dollars, it works in their case in that sense. So it's all about understanding the dynamics and those things in the background, because those things that so that's same with investing. It's not a one size fits approach or a raise the crystal ball solution. No, it's about looking at those nuances. And those nuances add up over time. Go on, Chike.
Yeah, man.
All right.
Agreed. Hold on before you go, Chike. Final comments. All right, because we
No, I'm
have
done with
to.
my comments. I said, as
Okay.
I said, do your homework, and yeah, just you need to do what you're supposed to be doing in terms of learning to become better, and sometimes you just need to step into the waters with a small amount, just to get it teaches better. Practice,
Mm,
practice, practice makes perfect, right? So pretty much you need to be practical about it in some kind of way.
yeah. Yeah. All right. All right. So I know that today we had some glitches in the recording. Some persons dropping off, myself and David a couple of times. Chike's audio issue. I want to thank everybody who has stayed here the entire time.
Still have
Really do
99.
appreciate it. Hmm?
Still have 99 people, so that's good. Thank you,
Yeah,
everyone.
that's pretty good. That's pretty good. So I really hope that what you guys took away from this is the discussion. Don't worry about the companies themselves. There, if you think about it, you'll start to be able to see opportunities for yourself, because that's what we want to take away from this. Not that David said Fesco will be $6, but that the reasons around it and the factors around it, right? That's how we want you to think about it. We're not here to tell you what to buy. We're not financial advisors, but we use a style of investing that we believe can help others if you're able to apply it. So that's all. I really hope you found value in this video. Please like the video. I'm actually a little bit disappointed with the number of likes that we have based on the number of persons who dropped in. Please do like the video if you're still here and you have not done so yet. We have, let me see if there's any announcements. We have two stock reviews coming up for April, Jamaica Brothers, which I'm really looking forward to, and Tropical Battery, as we mentioned. We have our weekly stock market updates on Fridays. Look out for that. And we do have a video with with Tyrone Wilson from iCreate on Tuesday. He's going to talk about the process of becoming a listed company, and we'll get to hear the iCreate story. So, please join us for that. And so, yeah, thanks, David. Thanks, Chike. If there are any questions that we missed, post them under the video or post them in the Telegram group. Either way, we'll get to it. Let me post the Telegram link for those who are not in Telegram group. And yeah, I think that's it. All right, guys, thank you so much. See you at the, so we're gonna have Stocks to Watch episode 3 at the end of June. All right, so look out for that one. We'll talk about kind of like a half-year review, and we'll see how the rest of the year shapes up from there. All right.
All right, everyone. Take care.